What is up, beautiful people? Welcome to Learn How to Trade, formerly known as the Midday Show. That is your girl, Adara. I'm Sharif, and as usual, we're gonna wait to for the chat to populate and for people to come over from the other stream, and then we're gonna do our patented roll call. No, I won't do that, Tim, of course. It is Sean Katina's patented roll call, and we're just boring it. She is the one named Sailor Moon. I'm gonna do that every time they come in. Roger, what's up, Roger? Jay Lee, what's up, my man? We were just talking about Carvana, Jay and I. James Dell, Patrick Langlois, Trader Forever. Pass overdose, interesting. Picky Eater, Hamster one of the OGs of the chat. Dan Gilman, what's up, Dan? John E, Big Adam Deluce, shout out to the Arsenal drawing Porto in the Champions League, a good draw for us. Because I didn't really want to play the likes of Napoli or any other number 2 finisher. Eddie R, NT Trade, 1 John 19, Loser 101. Interesting. What's up, Mr. Love Shack? What's going on, sir? All right, guys. We are brought to you by Search Trader account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the good folks there at Search Trader. And Dad Trader says, me. So I got to shout out Dad Trader. You can't just say me, and me not shout you out there. All right, guys. We're continuing with the theme of the week. We had a very special guest on yesterday dropping absolute hot lines. Shout out to Stephanie for coming on and for gracing us with her presence and giving us just a little bit of insight into what she had to say about the futures. She is a futures trader. For those who don't know, the theme of the week is the futures trading segment. So we're going to talk a little bit about that today. We're going to talk about spread trading and breakout trading. Probably not what you think with respect to spread trading. We'll talk a little bit about that, but it is something that I was very interested in when I was reading on it and refreshing my memory with respect to all the concepts there. But before we get into that, let me just bring in my trusty 8 charts over here. Wow. Okay, forget about the overall market because we know we're doing the dance with no pants here at 17,000 on the NQ contract. But look at all the other names that are running. You have Nikola. Forget about this dude going to jail. It doesn't matter. Nikola's pumping up on the day big. Neo, I hear people in the chat talking a lot about Neo. Neo's been doing very well on the day. Very aggressive move up into that $9 area. Carvana also getting that nice squeeze through. Can I believe what I'm looking at here? $61.61. Do they know that car prices are going down? I don't think the market cares. Mara as well continuing to pump to the high side, 11.5% for MARA. Good day for the mining name there. Michael Noss involved in that swing trade. AI, remember this stock? The best ticker in the biz, but maybe not the best company. 7 1/3 Adara for AI. Great day for C3 AI breaking through that $33, knocking on the door of 34. And how could I forget AFRM with that new deal with Walmart to include Affirm at the checkouts. Yes, the actual physical location. The retail stores, 4,500 locations are going to have a buy now, pay later option at the checkout, at the self-serve checkout, not the cashier checkout.
That's wild.
Yeah, it's nuts.
Yeah.
Anyway, great look for Affirm there as they diversify their portfolio. And here's what I alluded to earlier. This is the 17,000 on the future, 17,007.5, technically the HOD, but we are putting in higher low, bouncing off VWAP as a level of support. And there goes new high of day on the future, up 0.4%. Let's see if we can kind of keep this good momentum going here and close up above 17,000. It's going to be something to watch. NVDA, we talked about this one. I'm just going to digress real quick about the $500 level on NVDA. And what did we say? We were 0 for 2 on 500 breaks on NVDA, or 0 for 3, something like that. Every time we break above 500 and we close above 500, it's a huadunk the next day. Today, no different. We're doing the dance here at 492, giving up $8 from yesterday's ascent there, Adair. So NVDA continuing to find that $500 target a little elusive.
Yeah. I mean, NVIDIA is definitely an interesting one to watch. I like that double bottom around that. I'll just pull it up so I can kind of show I do like this NVIDIA double bottom. It more shows up because I have the 3-minute on my side chart. But either way, this kind of 489, just below 490 area is interesting. I think we might fail this 492, 493 area again, but I don't want to get involved in this just yet. I want a better sense of direction. But you know what I'm also looking at is I'm looking to get into the Cybertruck here. I'm looking to get into Tesla. But
my heart like skipped a beat for a sec. I thought you were about to buy the Cybertruck.
No,
I was getting so excited.
Yeah, no, I couldn't. Yeah, I apologize. Yeah, I also got the fail button there. But yeah, so Tesla
That wasn't
looking.
me.
Yeah, I figured. Tesla, I want to see. I wonder if we can break 258. For now, I'm kind of looking for a pullback. I might jump in here on a long. I am not going to short Tesla. That will not be occurring. I don't want to be that stressed out here. But yeah, no, Tesla, not a bad look at all. I'm just being patient, keeping an eye on some things, deciding what I'd like to dip my toe into. But yeah, the market has lots of opportunities, I will say that.
Is it going to be Besla today? Predictions?
Hopefully. It doesn't look like a Mesla, I'll say that for you.
I love how you have so many variants.
But, oh yeah, there's
of the
so
name.
many. The chat helped out. Someone in the chat gave me Depressla. Yeah, it's definitely a group effort.
I like
But yeah,
it.
no, I think Tesla breaking this 258 could be interesting to me. I want to see if we get a pullback, and I'll jump in on a long.
All right. Okay, let's get right to business here, baby, because we got a lot to cover. These are quite lengthy topics with some examples, so not a moment to waste here. Spread trading, we're talking about futures trading, guys. I'm not talking about anything else, so everything that I say in this context must be viewed from the theme of the week, through the lens of the theme of the week, which is futures trading, spread trading. In this strategy, it's basic. You buy and sell futures contracts of two correlated assets. We'll get to what that means in a second. Two correlated assets simultaneously, aiming to profit from the difference or the spread between their prices. For example, this is where it gets really clear. A trader believes there will be a glut of wheat. We know that these commodities, wheat, oil, soybeans, everything, those are sold on the futures markets. There are futures contracts for those, but it's equally as applicable to even to non-commodity future items, okay? For example, a trader believes there will be a glut of wheat on the market in an upcoming month, which will lower the price of wheat for future months. To capture the spread and benefit from this price shift, the trader simply sells a wheat contract for the earlier month, it's month expiries, and buys a wheat contract for the future month after the glut negatively impacts wheat prices. If the price action follows as expected, the trader wins. So currently we have a glut of wheat in the market. I buy the current futures contract or I short it. It goes down. I buy the new one because I know that there's not going to be a glut the next month for whatever reason. I understand the market, that whether it's price action or fundamentals, and then I benefit from the difference between the two. While the spread may not return as much profit as a single directional trade, it has the advantage of lowering the risk and making a one-way bet on price action. This approach is based on the belief that while both indices might move in the same general direction, there can be a short-term disparity in their performance that can be capitalized upon, and that's how you make. So I'm just going to read that example one more time. A trader believes there will be a glut of wheat on the market in an upcoming month, which will lower the price of wheat in future months. To capture the spread and benefit from this price shift, the trader simply sells a wheat contract for the earlier month and buys a wheat contract for the future month. Selling means shorting in this particular case. After the glut negatively impacts the wheat prices. If the price action follows as expected, the trader wins. So what are the different types of future spreads? Let's talk a little bit about those. There are three types that we're going to talk about today. One is called intermarket, one is called intra-market, and what is called commodity product. Okay, let's talk about the first one. Intermarket spreads basically involve multiple commodities. For example, a trader may long corn and short soybeans. So you could do that with oil and nat gas if there was an inverse correlation between them. Not that I'm suggesting that there is, just giving you different options for how you can view this kind of thing, okay? So intermarket spreads involve multiple commodities. For example, a trader may long corn and short soybeans. Intra-market with an A, spread allows traders to choose different monthly expirations for a single commodity like corn. A tactic also known as a calendar spread. This is more for commodities trading. I have access to them on my platform. I'm not sure everybody does, but this is equally as applicable. Commodity product spreads replicate the underlying business process of selling a commodity by taking it from its raw form to a finished market-ready product. Traders take a long position in a raw monthly commodity that must be refined before it is sold, such as oil, for example, and a short position in the finished version of that commodity. Okay? So, where's my other part here? One second. Let me just, I negated to do something here. There it is. And then the commodity product spreads, this is the last one we're going to talk about, replicates the underlying business product. Oh, sorry, that is the one I already talked about. All right, just getting my bearings straight here. Apologize.
Your bulls versus bearings?
Oh, I like that. Come on, bro. Come on, bro.
So I have a problem. I have a problem.
Yeah, sorry, I just had these two. So intra-market spreads allows traders to choose between different monthly expirations for a single commodity such as corn, a tactic known as a calendar spread, and then we have a different one called commodity product spreads, which replicate the underlying business product of selling a commodity by taking it from its raw form to a finished market-ready product. I just wanted to make that very clear. What are some common future spreads? So like we talked about corn and soybeans, for example. That's the first one. That's an inter-market spread. Crude oil and petroleum, an example of a commodity product spread mentioned above. You take one in its raw form, and then one is in its finished product. Obviously, petroleum being, crude oil being the unfinished form, and petroleum being the finished form. Soybeans and soybean oil, for example, that's a commodity product spread as well. Natural gas and electricity, another example of a commodity product, obviously because nat gas is converted to electricity. July and December corn, that's an intra-market spread. So you have one contract for corn for July and another one for December. That's within the same market. And then you even have the treasuries, the notes that we talk about a lot about, the 2-year versus the 5-year. And we talked a lot about the inversion between the 30-year and the 10-year, the 30-year and the 2-year, the 10-year and the 2-year. So you can trade the spreads between that equally as much on the money markets as you can on the commodities market. So the treasury notes, for example, would be the 2-year versus the 5-year, both those that I watch. And last but not least, everybody probably knows this one, gold and silver. You can look at those basically as well and try to spread trade between those. I don't know how correlated they've been as of late. I wonder if you could even do something like a gold Bitcoin, because you know what I mean? Like people have been talking a lot about the hedging aspects of it, or sorry, the inflationary hedging aspect of it, neither of which really did that well during the inflationary period. Gold didn't do that well. Gold's finally starting to do well above 2,000, and Bitcoin didn't do that well last year when we had really high inflation either. So I'm not sure how much they really are good for hedging. Any questions about that, Adair?
Actually, yes. So I know you trade futures, so hopefully, I think that I'm really happy I get to be able to ask you questions on this. So with regards to I know you were mentioning here in the notes as well here, the idea of just kind of comparing, it could be, I guess, fundamental or technical knowledge of the markets, right? Would you say that having a fundamental knowledge of the commodities or the futures you're trading is helpful, like not necessarily more so than technical, but would you say that having that fundamental knowledge is key if you're going to trade futures? That's
a really good question. And I would say, you got to even have your ear with politics, with commodities, because commodities are heavily dependent on political, look what's happening right now in the Red Sea. The Houthis there are, again, we don't get political, but it has something to do with the oil market. The Houthis are said to be attacking some of the ships going through that lane. And as a result, we saw a little bit of a pump in oil price yesterday. Not sustained, but we got a bit of a pump. Now the Americans are said to be, putting in a task force to protect that area to allow safe passage. So if you don't know what the hell is going on in the world, these commodity markets can be a little bit daunting. I bet you, if I had Michael Noss in your seat right there, he'd be like, I don't give a dang.
He's all technical.
He's all technical.
Okay.
He's looking at those charts, and to him, the charts speak all the words that he needs to reach. So he just needs to know that there's a headline. He doesn't care much about what the headline is. Just he needs to know that there is a catalyst, and as a result, the catalyst is moving these markets. But now, what is the chart telling me, right? And so it really depends on who you're asking. I personally like to take the middle road. I like to know about this, and I want to know about that. I don't see why I can't know both. You know, and that's just my personal opinion. Yeah, Jay Lee says they even attacked the cargo container ships in the Red Sea, which is all commodities. Yeah, and then that's the issue. So commodities, you got to have your ear with politics and with the world market. That's just my opinion. But let's be real about it. I'm not a commodities trader, so it's about what I've been hearing, not what I've actually done in real life.
You know, I was just curious too, because I know you are like you do know fundamentals as well, but I know you also really like technical aspects. So that's why I wanted to ask you about that. So I appreciate you answering that question.
Yeah, I 100%
Thank you so much.
agree with you. And like I like to look at both.
Yeah, absolutely.
So with respect to any of the strategies that I was talking about there, with respect to spread trading, there are three. Just to reiterate again, I hate to be repetitive, but you know this is all new stuff for us. There is intermarket spreads involving different markets, like the futures market on corn versus the one on soybean, and how they can be inversely correlated. And knowing how to trade that. There's the intra market, so looking for different contract expiries for the same commodity, for the same bond or treasury yield, whatever. And then there is the commodity product spreads, which is essentially replicating the underlying business product of selling a commodity from its raw form to its finished product. The perfect example of that is oil and petroleum, and knowing how the differences in price spreads can and affect the markets, and basically taking advantage of that. So those are the three types of future spread trading that we'll talk about. We're going to be repeating that as the day goes on, and maybe we'll find some examples in the wild as we go. But anything, yeah, I love to say that, by the way. Roland Joe, the NOS boss thinks headlines and market is rigged. I don't think he thinks the market is rigged. I just don't think he cares about the headline as much as maybe I do or Adara does. We want to know the nitty-gritty of the deets. The NOS boss is all about those bar charts and lines on the graph, baby, because that's all he does. Tracy Young. Sharif, any ideas of the direction of the triple Q after the bond auction later today? Only time will tell, my friend, because we've seen lately that bond auctions have been met with more exuberance than the previous print. And that's been shown to us vis-a-vis the lower yields that we've been getting on these bond auctions. And so I always say this, and I'm going to say it again. I don't care if it sounds repetitive. The lower the yield on the auction, the more demand. The higher the yield, the less demand, because you've got to entice people to buy that treasury note by offering them a higher yield. I'm looking here, Tracy, though. I don't see an auction. What's going on here? I don't see any auctions. Tracy, I don't see anything for today. I could be wrong. No, my friend, I don't see any auctions for today. Did you see any auctions?
I did not see any auctions today.
No, I don't see any. So I'm looking at my economic calendar, and the only thing that's important to me today for our purposes was housing starts, and that's why you're seeing Caterpillar and maybe some housing builders moving up, because we had higher housing starts than consensus and the previous print as well. We had Canadian CPI, but I don't think many of your viewers care about that. And that is it. We have U.S. foreign buying T-bonds at 4 o'clock. That's 1 out of 3 bulls. Okay, yeah, I don't see an auction today, guys. So, sorry, I can't help you with that one. 20-year today, says Glenn Smith. Glenn, I don't see the 20-year on here, man. Yeah, I don't know. I'm not seeing it on mine, so that sucks to be me. But yeah, I don't see. 20-year auction is tomorrow, says Matt Booth. Let me have a look tomorrow. Tell you what we got tomorrow. But yes, tomorrow, 1 p.m., 20-year bond auction. That is important, so we will be covering that. No bond auction today, guys. Okay, you guys are having me worried here. No bond auction today. That's tomorrow. Next, breakout trading. This one is kind of the one that I'm more familiar with here, okay? And it's basically about taking breakouts above or below key resistance levels, as well as using some chart patterns. Let's get to that. Before we discuss the strategies of breakout trading in the future, let's take a moment to detail the specifics of a breakout. Breakouts occur when an asset's price moves out of an established trading range. This movement is typically accompanied by an increase in volume. Always look to volume as a confirmatory indicator. The general idea is to go long when the price breaks above resistance and go short when the price breaks below support. Sounds simple, right? Not so much. Breakouts are a core focus of traders as they typically signal impending volatility and the possibility of a significant price trend. Breakouts occur in any type of market and can be tracked with breakout trading indicators like we've talked about in the past: bull flags, ascending triangles, ascending wedges, inverse head and shoulders for the more bullishly inclined, along with the regular conventional channel breakouts. Okay. When identifying breakout opportunities, it's generally advisable to look at assets with well-defined support and resistance levels. Pre-breakout pressure or price action squeeze, and I'm going to show you an example of that in a second, is another common identifier of potential breakouts. This occurs when higher lows, you know how much I love this, higher lows are formed when resistance is being pushed, or lower highs where support levels are concerned, okay? While it's possible to trade on the simple principle of go long above resistance and go short below support, experienced traders go a few steps further by analyzing breakout strategies in greater detail. Don't I know? One example. One of the primary hurdles traders encounter when attempting to trade on this type of strategy is the presence of those doggone false breakouts. God, I hate those. You get a break above 17,000 today, you go long on the NQ, and right now we're at 16,988. So you're 12 points out of the money, right? All you had to wait was for that 17,000 breakout. That's what the book said. You know better than that, right? Where was I? One example of the primary hurdles traders encounter while attempting to trade this strategy is the presence of false breakouts, or fakeouts, as they're sometimes called. Yeah, these occur when an asset's price appears to be moving out of a range, but ultimately reverses. This common trap snares many new type of day traders. So let's talk about some of the breakout trading strategies in the future. I like what this one is called, second chance breakout strategy. This was really more down my alley. You know I don't like chasing stocks. I don't like chasing the future. I want to get in at a good support level. And this is basically kind of echoing my strategy here. It's called the second chance breakout strategy. What does it do? One way to potentially sidestep the continuing problem of false breakouts or fakeouts is by following the so-called second chance breakout strategy. In this case, a trader waits until a legitimate breakout occurs, but only enters a position after the price moves and retreats to the original breakout point. Remember what I talked about, the candle wicking dance, right? We're going to do our little candle wicking dance at 17,000.
Yeah.
We did our wicking dance, and look where we are. We're 16,990. So what I want to see is a clear break of 17K. Go farther, go 17,025, and then come back into that 17 level. It doesn't have to be exactly 17, Adara. 1705, 1706. Show me you've cleared 17. Buyers have overwhelmed sellers, and then I'm going to be interested in wetting my beacon. This is what this strategy basically is saying. Let's read on.
Okay.
It should be noted that such retests do not always occur, so you may miss the trade, and that's something that's always a potential result. Additionally, a trader need not wait until the precise breakout point. Something relatively close will usually suffice. So if I'm waiting for that 17,000 point breakout, I don't have to wait for it to go to 17,025 and then come back in exactly into 17. It may even go below 17. Come to 16,995 and then get bought up immediately. That's good too. It has to hold the general area, okay? If Yet if a breakout does retest the original price point, it gives a trader a second chance to trade on that movement. Stop losses here can be used with this strategy to minimize any potential downside, and that gets a little bit tricky when we talk about where to place stops. The core benefit of this approach is simple. Rather than having to deal with a maddening process of fakeouts, false breakouts, traders can instead exercise patience and trade on a proven breakout. So you wait for that 17,000 point level to get cleared on the NQ and cleared by a decent amount. Now that's what decent amount amounts to is going to be based on your experience as a trader, and then you wait for it to come back into support now, formerly resistance 17,000, and then you buy the dip. Any questions?
Yeah, no, I think that makes sense, and I think it's interesting how that's a strategy that you can use specifically with futures, but also much like what I was saying, what I thought was really interesting about what Steph had to say yesterday, which was a great talk, is a lot of the stuff with futures is also applicable to what you're doing with trading, like, assets and equities and stuff, right? So like the breakout trade is a huge, and it's also an example of what you said earlier today and what I learned in general with regards to volume as being a really important aspect. It's a nice confluencing factor there. Just shout out to Obi. But yeah, so I think that's interesting to keep that kind of in mind with, did this move happen with volume, and that can kind of help confirm the move. Yes, ma'am. And sometimes not rushing into a trade full force, just kind of waiting for that second breakout and that testing of the level. So yeah, I think it's a nice confirmation of everything that that we've kind of talked about earlier.
Absolutely.
Too, so I appreciate that.
And guys, like, you're going to become like really adept at figuring out what works for you. Let me give you an example.
It's a good point. Yeah.
Yeah. So let's go into the chart here, Chilean Nightmare. Let's go into 17,000, where we are right now on the future. So we got, a perfunctory break up to 17,012, and then we got the huge huadunk down, not huge, we got a huadunk down to 16,985. So what you could do here is you could wait for it to absolutely clear, right? You want to move, like I was saying, 17,025, and then you pack your patience, you wait for a general retest of the 17,000 area. Now, say you're unsure of whether it's going to be, whether that actually will be the second chance opportunity. So you get in one contract, or if you're trading the Qs, you get in 20 shares at that level. It continues to run up. It moves up another 10, 15 points, showing you that, okay, I'm going to hold 17,000. I'm dead set on holding this level. You add another one contract, or you add another 20 shares of the triple Qs or the T triple Qs, whatever the hell you're trading, okay? So you can do this based on your own risk appetite. You don't have to go gung-ho right at that first entry and take 5 contracts, take 10 contracts, or take 100, 200 shares of the Qs or the T triple Qs. You can incrementally add. Obviously, that comes with the downside of not having the best cost basis, but everything is a trade-off in trading, right? Surprisingly enough, everything is a trade-off in trading. I figured you'd like that.
Yeah, good trade-off.
Right?
Yeah.
And so you don't actually have to go full force right at that initial area when you're using the second chance strategy. You can get in a little bit, and then as it holds a level, as it proves to you, I'm going to hold 17, you add, right? So any number of ways you can do this. There's no right or wrong way. Whatever works for you, whatever floats your boat, as my cousin always says for some reason, because he's obsessed.
It's a fun saying, right?
Yeah,
whatever floats your boat.
Well, if water typically floats the boat. Whatever. It's all good.
Yeah, take it very literally here.
Air, actually, the Chilean Nightmare is correcting me. Mary's like, it's the air that's actually floating the boat. Is that true, though? Is it? It's the buoyancy that keeps you up. I'm learning something new every day.
Bringing science, yeah.
He is. He's bringing science. The air displaces the water, which creates the buoyancy.
Go Fabian.
Go Fabian, yeah. Whatever toots your trumpet says symphony, synth
pop boy.
I'm figuring he probably has some affinity to music, and maybe that's why he used trumpet.
Yes. Yeah, right. Yeah, no, that's really that's a good like psychological profile there, Sharif.
Right.
But yeah, no, I mean whatever's saying, yeah, it's about like finding a strategy that works for you.
Yes, ma'am.
Yeah.
Anything to ask or to comment about the second chance strategy on the future?
Yeah, no, I think, like I said, I think it's just another one where I think it is interesting, like I was kind of saying earlier, how this is something that has parallels, and I think maybe could make futures trading less daunting, at least from my perspective, because then you can kind of realize some of the strategies that you're going to use are some of the same strategies you'd implement while trading assets, right? So it's because I think I was like, I felt very daunted by the idea of trading futures. And I think, so I think if you look at it like these strategies, like the spread strategy is a bit, more maybe future specific.
It's a little nuanced.
Yeah, nuance is a good word there. But yeah, I think, but something like second trade strategy might be a good, beak wetter or dipping your toe into futures trading because it's something that you maybe have a bit more experience with, because I think
feel
some
like
people
it's more
do some
straightforward, right?
Yeah, and I think it's more approachable. I think it's definitely more accessible, like hello. So yeah, so I think it's an interesting, I appreciate that kind of take on futures trading, and that's my, I guess not a question, but that's my 2 cents there.
Yep, bang on. All right, second, with respect to breakout trading strategies, we're going to talk about chart pattern strategy. Ooh. Look, I got to tell you, full disclosure, you know that I'm more inclined to use this second breakout, what did I call it exactly? Second chance breakout strategy on the future. I'm not much of a chart pattern person, but I do appreciate my higher lows and or lower highs, whatever the case may be on the future, and those end up sometimes manifesting into patterns. So I don't really have a problem there. Let's go on. Another essential strategy involves trading on chart patterns, involving the breakout trading indicators like mentioned above, rather than the simple trading ranges that we talked about in the second chance strategy. Basic chart formations such as triangles or flags tend to be better breakout trading indicators than simple range spotting, according to this article, a technique that can be followed by even the rawest of novices. Triangles, we're going to talk about triangles here, come in 3 forms. You'll recall from our week on chart patterns, we have the ascending triangle, the descending triangle, and the symmetrical triangle. These varieties simply describe their appearance on a chart. For trading purposes, however, they are largely the same. Triangles form on a chart when price movement narrows across price swings tracked over an extending trend line. Triangles can represent both continuation and reversal of a pattern and are present in uptrends and downtrends. So for example, when you see like we had today, and I'm not saying we see an ascending triangle on the future, but we're going to look at, oh, I'm not allowed to bring this one in. Let's bring in the other one. I got in trouble yesterday. Let's bring in this one. So I'm not saying we see a triangle here because we obviously don't have a flat top. This looks more like a channel to me.
I was going to say.
Yeah, but we have higher low, higher low, higher low, higher low, and we also have higher highs, okay? So we're within a channel until we're not, right? So the whole point is to, you could say, oh, Sharif, look, I don't need a breakout strategy right now. I can trade the upward trend by working within this channel. So when we get dips of into that 16,890s, low 890s, or high 880s, for example, around right here, I get long. And then I sell once we get, into the 17.0 teens. And I repeat that over and over until I have a decided break of this upper trend line. Sure, you could absolutely do that. Personally, I would wait till there was absolute confirmation that we took the 17,000 point level by the way that I explained in the previous strategy, and then I would be looking at getting long on the second chance. But that's not the only way, and I would have missed out on this entire up move if I had stuck to my own strategy, which is fine with me. It may not be fine with other people. They may get all sorts of FOMO and be like, no, this is a waste of my time. I could be trading this from a range perspective. And it would make absolute sense to me to get long on the low end of the trend line and get out or sell on the upper trend line. Or if you really want to get risky here, short the touch of the upper trend line. Personally, I wouldn't do that because we're up 1/3% and the most of the trend is up. So I would want to be long inclined, but you could do either way. So yeah, with respect to chart patterns, this is not exactly an ascending triangle here, but I just want to make the point of why it's important to look at ascending triangles and descending triangles is because these higher highs and higher lows factor very importantly in the future, okay? All right, moving on. Triangles, okay, I already talked about that. Charting triangles is often helpful because it provides an easy to grasp visual representation of price action and how larger trends are developing. Analysis of triangles and other chart patterns can also help traders spot breakouts with greater precision and manage their positions with greater insight. So for example, if I had an ascending triangle, we know an ascending triangle requires higher lows with a flat top. We know that. So that flat top has already got my attention. I know that that is the resistance level that we've been hitting over and over and over, but I also know that buyers are overwhelming sellers incrementally. Why? Because of the higher lows. So it really helps me narrow my focus at a price level. I know for certain that what I'm looking for is the break of that flat top. So I do appreciate the triangles in helping narrow the focus onto a particular price level, but also showing you where the direction of the trend is. So it's doing two things that are critical to me. Number one, it's showing where the trend is, and number two, it's telling you that this is the key price level that you need to be looking at, right? Whether to the high side or the low side. So that is the benefit, I would say, of triangles. While false breakouts are certainly an annoyance, some traders attempt to use their advantage by following a false breakout trading strategy, though that's a technique that's best employed by those with a sophisticated grasp of breakout trading fundamentals. We're not going to get too much into that. So, two breakout trading strategies on the future that we talked about today. Second chance breakout strategy. You have to wait for a clear level to get cleared, and then you wait for a retracement into the general area of support before you're getting long. The point is here to have the instrument, the futures contract, whatever you're trading, prove to you that that level has been cleared and buyers have overwhelmed sellers at that level, but you get a momentary or temporary retracement into that key support area. And from technical analysis, we know that resistance becomes support once cleared, and then that's what you get long. The other one is chart pattern strategy using triangles, looking for higher lows, lower highs, etc., looking for that clear support line, resistance line on the ascending or descending wedge, and then basically trying to get a trade off there, Dara.
Yeah, so basically, I guess to kind of summarize a little bit, what you're kind of saying is like whatever strategy you use. So you're using the example if you prefer breakout trading, but some people might have gotten in on the NQ range if they wanted a bit more of the move. So whatever strategy you use, as long as it works for you, that's kind of the way you can do it. And there's, again, what like I was saying, I think it's interesting how much overlap there is between some of these trading strategies we use for the future and what we would use for like assets or stocks as well, or equity. So I think that's something I didn't really realize going into this futures week that I feel like I've picked up on. I also have a question for you.
Go.
So because I know you like technicals and chart patterns kind of for assets sometimes, and I know you don't really use them as much for the futures. So I guess I'm going to try to find a way to word. Also look at the technical.
I love when he does that. He's so clever with what he does back there.
Just like putting things in the screen, yeah. But so I guess my question is then. When you have, like I know you said you like you look at key levels, do you think that they're more significant sometimes if they do form like in a range like this, or if you have these higher lows, like do you think that adds kind of confluence or significance to these levels? Because I know the levels are the key things you're looking at for the futures. Well, I don't know if that made sense.
No, it does. But one thing that's it's really important to me, number one, how many times has that level been important? So remember how I told you the more times we get touches at a level and it keeps repeating, the more you know that that level is important. Case in point, let's go to the 4-hour on the ES, okay? Because this is what I've been charting every morning. Let's move these stupid things, remove this commentary, let me just remove these so that we can see the chart really clearly. Fabian, if you can, thank you. So remember when we cleared 4,500 Adara? Yeah. Right? This was the day, the November day, this was the CPI day right over here when we cleared 4,500. So 4,500 was a resistance level. And then look at this sideways consolidation for however long, right? After we cleared 4,500, the next hurdle was 4,600. And then 4,600 became an absolute support level. Every single time we came down into 4,600 on the new contract, not the old contract, guys. I'm talking about the March contract, not the December one, because I know right here we were still in December, but we're looking at it from the March contract perspective. 4,600 absolutely held as a support level. So every time it came down to 4,600, you were a buyer at that level, or it bounced. The market was a buyer at that level. So right away, I know for certain that 4,600 is a very important support level because it held, Adara, from November 21st until the eventual, clearing of it, I would say on December 8th.
Whew.
Yeah, we kept making touches at 4,600 for that long, between November 21st to December 8th, however long that is.
That's wild.
About a couple of weeks worth of trading. So the more touches we get at that level, the more to the exact opposite, look at the attempts at 4,650. Rejection here, rejection there, and then finally on the 21st, what was that, the 11th? Yeah, the 11th of December, you got a clearing of it. So the more touches I get at a level, the more important it is for me. And so I hope that.
And so the more significant it is then when you clear it.
Bang.
Okay, that makes sense. Yeah. No, I appreciate that. And so does that also go then for the intraday movement, or it's just more significant on the daily, on the longer term?
I think it's absolutely as significant on the daily. But again, I want to keep saying this. All chart patterns and chart analysis is fractal, meaning that you can use it on multiple time frames. However, the smaller the time frame that you go, 1 minute, 3 minute, 5 minute, 10 minute, the more prone it is to failure. The higher the failure rate is going to be on those particular time frames. The wider the time frame, if you had the exact same case where there were 10 touches at a level on the daily and 10 touches on the level at the 1 minute time frame, I guarantee you the 1 minute time frame will have a higher failure rate than that one on the daily.
Okay.
And that's just the way it is.
Thank you so much. I appreciate that. Yeah, because I think we talk about levels a lot, or I, try to talk about levels on the assets, but it's really cool to see as well, like that the key, how key it is sometimes when these futures break out of these ranges, specifically the ES, because that was pretty key when we broke out of that. So yeah, I really appreciate you going over that example with me.
Absolutely. Okay, so we're above 17,000 right now on the future. We're doing that dance again at 17. Let me adjust this a little bit. Over here, we really haven't cleared it with any vigor. We're still 1 or 2, 3, 4 points away from that 17,000 point level. Not really clearing it, so I'm not too excited to punch in long here on the future. I'm gonna wait. If it goes without me, it goes without me. That's fine. But I really need it to clear a little bit farther from where it is right now to kind of be convinced that this 17,000 level is come and gone, and we're going to be looking at it from a rear view. Not quite yet. Not convinced about this yet. Let's see what Felipe Oliveira. No question about that. Of course, 1 minute has greater failure, but the ones that get right has righter return. I think you mean higher return. Well, not necessarily, right? Look, you could get the same type of move on the daily, right, that you could get on the 1 minute. In fact, I would suggest to you that you'd probably have a larger move on the daily, because if you're trading off the daily time frame, you're likely to hold it a little bit longer than you would be if you were trading off the 1 minute time frame. So the chances of you getting a really big move on the daily if you were swinging, probably better than the one on the 1 minute. But look, I'm not disagreeing with you. I'm not really arguing with you. I don't think we're really disagreeing here. All right, yeah, people just talking amongst themselves. I'm gonna have to read these comments before I read them out after yesterday's little debacle. All right, I'm not sure what this means for profit. Sharif in the middle, 100. What's up, baby? I don't know what that means, but you said 100 beside my name, so you're in my good books.
I like that rule.
All right, names, well, I don't know how to say your name. You need to learn to use better visuals when teaching. Also, I would recommend providing handouts on your site. Not a bad idea. I don't know if I need to learn it. I'm pretty sure I know how to do it. We just need to employ it. But thank you for your suggestion. It will allow you to gather emails and data too. Okay, thank you for your suggestion. Maybe I can make my notes into a little PowerPoint and put it on the website, the watch list website. I don't know. We'll have to figure that out. We'll talk to the Brendo and see what his thoughts are on that. Jay Lee saying fun news today. Yeah, I know about Nikola Founder. He got 4 hard years, baby. He's locked up. Say that again, Katina Man. The Katina Man wants to know how many years I think he's gonna actually do. I'm gonna say 1.5 to 2 years, if that. Yeah, and then he gets like a halfway house or whatever they call it down there. Good behavior, yeah.
Good behavior.
There you go. Yes, there we go. All right, so we're clearing the future now. We're up to 17. 17,009, 17,009, 17,007, very close to that 17,012 and a half that we have as a high of day on the NQ March contract. Keeping my eye on the future. I'm very interested in the long, but I still need more proof that we're really getting away from that 17,000 point level. The Katina man is now out of more of his SoFi position. Yeah, he just wet his beak on some profits. So anybody following the Katina man with the SoFi position, I just wanted to let you know.
Yeah, no, I like that. Yes, he is still in, but the beak is getting wetter.
He's wetting that beak,
That is
baby.
the update there. Also, I've seen some in the chat. I'll say bickering, some people going back and forth about their thoughts on Tesla. I can give my thoughts on Tesla. I'm very proud of the scalpulation, little baby, teeny tiny long we had on, thank you, on Tesla. Like I said, my new approach is getting in at levels I like with small size, not planning on staying very long. If I have an out in mind, but if I see some resistance, I'll get out earlier. That's kind of what I've been doing. So I was planning on taking this as far as 258.20 because that was the previous high of day. Thereabouts. I saw some resistance around 258. I got out. Thank gosh I did, because after that point we definitely fell out. But yeah, I like this teeny tiny baby long. I know some people in the chat saying short Tesla, some people in the chat saying long Tesla. What I will say, just purely on a technical basis, is look how many times we've failed. Like, these are perfect wicks. These touches and failures of this 256.85. And so what that tells me is that the buyers are overwhelming sellers at this key level. Shout out to Sharif for teaching me that and for testing me on that yesterday as well. But yeah, look at this. I would say for right now myself, I'm staying out of Tesla until I see a break above this high of day, or I see a decisive break of this area we keep wicking below. And when I say decisive break, I mean a candle close below that level. I am very open. I'm not biased in either direction on Tesla until the chart tells me what to do. Because I don't make the decisions because the chart does not care about my feelings. Also, shout out to Evan11 with the 99-cent super chat. It just looks like a little money eye emoji, and I am a fan. But yeah, here we go. Also, yeah, hold my beer. Yeah, get a Madeira. You are the pun queen. Y'all do as you're told or else. Haha. Yeah, I don't know. Thank you there. I appreciate that. Shout out to some other people talking about Trevor Milton here in the chat. But yeah, no, I think
sentenced to 4 long years.
4 years.
We'll see how many he does though. What's your guess? You're a criminology major. You know about that.
Yeah, but sentencing, I find, like, especially, I find, like, I'll put it this way. I think sentencing should probably hold more weight than it actually does, because there is, especially if you have, you know, clout or money, I will say it's a little bit easier, I think, to have some of those sentences reduced. You know what I mean? Like, I would say I'm kind of looking towards, like, similar kind of cases like Elizabeth Holmes, that type of thing. Sam Bankman-Fried, although he has not yet been. Yeah, so things that kind of related to fraud. So yeah, we'll see on that. I'll be skeptical about the 4 years.
So what I'll tell you, basically, the major things that they look at in sentencing are mitigating circumstances and aggravating circumstances and previous history. So those are the things. So what they look for, so to make up the elements of the crime, you just need the mens rea and the actus reus. We know that. That's very simple, right? So the guilty act and the guilty mind. However, there are circumstances where you, even though you committed the act in question and you had the culpable mindset, there are circumstances where you have done things that you deserve a harsher sentence than me. Let's take drinking and driving, for example. You blow 0.09 rather than 0.08, okay? So technically you're over the limit, all right? What if I blow 0.16, so I'm double the legal limit? Right away, if I'm over a certain amount, there's what they call a statutory aggravating circumstance, meaning that the court does not have the choice. It has to give me a harsher slap on the wrist than you, even though we both committed the same act. But mine has harsher circumstances. And so there are ones the exact opposite, mitigating circumstances, right? Where I've done some pre-trial, what's it called? Volunteer with the kids, or I had some actions later that showed that I was really, I I felt bad for what I had done, etc. So there's mitigating and aggravating circumstances in sentencing. So we're going to have to see what his specifics are in his case, because it's really going to probably come down to that.
Yeah, no, it's interesting. And I think too, we had like a whole class on sentencing actually when I was studying criminology. And what I learned from that is it's way harder to kind of come up with a sentence, because that was what we were kind of challenged to do, than it seems. Because and the thing is too, is it really, like, a lot of people will have kind of different individual views. So you kind of have to leave your biases at the door, check them with the valet, and really like look at the case on its merits. But yeah, the whole idea of mandatory minimums is really interesting. I know kind of hotly contested.
It is.
So I appreciate that legal fire there. Also, yeah, Michael Wu in the chat. I am was a criminology major. I did some like writing and stuff as well, but my technical major was criminology. So yeah, I love that. Was a cool conversation, a nice little foray there. But yeah,
yeah, why not? We always drop some hot fire. Yes, I was a criminal lawyer for many years.
Ooh, that's
and that's kind of why I know all this stuff. I don't practice law anymore, but yeah, you can't empty this brain. It's still there, baby. All right, let's move on. Any trading related questions, Adara, with what we've been talking about today, because we're going to restart the lesson in about 9 minutes. So anything that you guys want to ask with respect to any equities, you want to talk about some futures. I know you guys love throwing tickers in the chat. Adara and I would love to review that for you. Just throw it in there, baby.
Yeah, I think most of my my questions I kind of asked earlier, I feel like I'm the type of person where I have a harder time like storing questions. So if I kind of like in my brain, so if I remember them, I remember them.
Right.
Like I like to usually kind of ask as I have them. But no, I think like in general, like I've kind of said it before and I'll say it again. I really think it's interesting how much, like I think I viewed the futures prior to this lesson as something where they're kind of their own separate entity. And it's kind of cool to see that there are a lot of overlaps in how they're traded. And it's just about like much like with assets, is about your specific approach to them, because I know you prefer levels. There are some people who prefer chart patterns, and there's sometimes when you can have overlap between the chart patterns and the levels kind of happening at the same time. So yeah,
Tina is making me laugh in the chat. He just wrote Better Call Saul. I don't even watch that, but I just know because of AMC. Sometimes I watch AMC.
I love the capitalization there too. Like he's
Katina is killing me there, bro. Better Call Saul.
I was gonna say your salad. Oh.
Show the salad, Katina, man. Remember, somebody was asking me in the chat, like, he doesn't show his food. He only talks about it. I'm like, he always shows it on the midday show. There you go. Proof is in the pudding. The Katina man just did. Say it again? Chicken on top today. Hold on. Didn't OB say that? Oh, the other food, there was no chicken. Got it. Yeah. All right, we're rejecting 17,000 quite aggressively right now, guys. So a big move down here on the future. Do we have a hold? Like, we're still above VWAP. VWAP on my chart is that 9,716, 9,716, 975, give or take that area. We'll see. We're going to take a long here and see how we do at this particular level, looking for continuity on these markets. It's been a nice upward channel, but we could absolutely tank. Let's be real about it. We didn't get that clear move away from 17 in the way that we wanted, so we're going to try our hand here and see what we do on the future. Anything that you guys want us to look at? Affirm, Adara. It's been rocketing and people want to talk about that. Tom H. You want to have a look at Affirm?
Let's talk about Affirm. Let's see if we can affirm how we're. Oh my God, Affirm is up 18%. Okay, yeah, Affirm is. I was gonna make a pun and then I got like thrown off there with how strong this one is on the day. Yeah, this is gorgeous. We had that catalyst with regards to Walmart and the buy now, pay later function.
Yes, ma'am.
Which I think I would like to read more about, because that sounds fascinating. It's something I don't like to usually have opinions on a thing unless I read a whole bunch about it, because I love, reading stuff like that. But yeah, this is a really nice. We had kind of an upward little elliptical earlier today. Now we were kind of in an upward trend. We officially broke that to the upside.
Bang.
I want to look at the daily because I like seeing past levels here. To kind of know where we have to fall back on. Although it looks like with Affirm, we might be in semi-uncharted waters here. Let's see, is this oh my gosh, Affirm, hello. Oh, never mind, okay, so so we're not at new entire highs. But yeah, we did definitely break out of this key area. We have not pushed past since, looks like April 1st, 2021. So definitely not April Fool's Day for Affirm. Look at how strong this one is. But yeah, from there, I mean, The next kind of movement up, we did have that other peak here, and I don't know if we're going to touch this today. We'll have to see how it goes. But yeah, we had 675 was like the area we kind of fell from at that point. But yeah, I think definitely breaking above this kind of 50 area is pretty key. It looks like there is. It's always hard, I find, especially for me, kind of looking at this in front of everybody, to kind of give levels when we haven't had those kind of levels in a while. But yeah, with a firm, I mean, like whatever you're going to use, as long as you have your risk reward principles, and kind of be aware we have not been at this level for a while, but we have a strong catalyst on this name. We are up. We've not been at that level since April 2022. Shout out to Diamond Realty in Miami, 305 in my city. But yeah, there we go. This is yeah. Woo!
Some crap stock was just asking me if the Katina man was holding as a firm. No, he took it from 47.50 to 46.90. Sorry. To 49.50. So he's out of that one. He already took his profits and got out of Dodge. But crap stock wanted to know about that. Well, look, I mean, it's a good trade, dude. London Dudley, Sharif, can you check out? His best out was the SoFi short. His current position on SoFi, best trade of the day for the Katina man. So anybody following along with the SoFi trade, he's still holding that bad boy, but he's wet his beak a couple of times. Where was London Dudley? Sharif, can you check out CIFR up 35% since yesterday? Absolutely. Let's pull up the chart over here for CIFR. Have a look at what this bad boy
I think I saw
doing.
some of this one on the.
I think the future might be tanking here, so I might have to. I'm gonna get out if it breaks view up. So that's just gonna be my look. We're looking at the weekly. I don't want to look at the weekly. I want to look at the daily. So we kind of really got going here during the pandemic. I mean, that's not surprising. Everything really did. As of late, though, interesting pattern. So you have this higher lows, but then you also have a recent pattern of bit lower highs. So getting a bit of a compression pattern here. That's what I'm seeing. You also have a bit of a flat bottom as of late around this 2.25, 2 1/3, this general area over here. Now I start wide time frame, then we go narrower time frame, right? That's how we do things around here. CIFR, okay? So nice move up the past couple of days. I'm not even gonna bother looking at the catalyst for now. All I know is it just broke above this high, but it is still below this high over here, this 4, almost and a half. If you look at the closing print, it's more like 4 1/4. Let's look at the 15-minute time frame. All right, so what are we looking at here? Big move of yesterday, outsized volume when you compare the volume yesterday and today versus the previous several days. Obviously, we are at higher RVol at the moment. This was the closing print yesterday, this $3.15 area. Let me add in the ticker so people can follow along, CIFR. All right, we don't even come close to yesterday's closing print. This morning's wicks were all, for whatever reason, at this $3.30 level. You didn't really break that level with any vigor. I don't know why that level was important. I guess maybe because it was the closing print at 8 o'clock yesterday. You know how I feel about aftermarket volume, but the fact of the matter is it really held up. Let me put in over here because there we go. All right, just dipped down, looks like, into that 354 after making a 385 high. Let's see what it does at this 3.5. Okay. Couple of reasons. One, you have some pre-market highs, right? Now, for these small cap gappers, you know what my rule is, going back to what we talked about during the small cap gapper week. To get long, we need to break above the pre-market high. The pre-market high was that 357 area. We broke above it and we cleared it by 30 pennies or so. We got to 385. Now we're coming into that pre-market high. Does it now act as an area of support? We'll have to see. It was definitely an initial area of resistance. Does it act as support at these levels? So that's what I'd want to see. If we don't hold this support level at 355, 350, I'm going to be looking possibly at this morning support level between 3 1/3 to 3 1/4, how it acts in and around this area over here. But decent move on the day. The daily is showing a bit of a compression pattern. We're not completely out of the trend because we haven't made a decided higher high. On the day, intraday, I would say you have to wait and see what it's going to do around this level, this 350 level, given what it did in the pre-market. If it fails and continues to break this 350, keep an eye on it between 3 1/3 and 3 1/4. This is the pre-market support level, or even after-market, actually. What's the 5-minute look like? Same thing on the 5-minute. SoFi is dumping apparently according to the Katina man, so be careful with that if you're not long. I mean, if you're not short, if you're long, you should be getting out of Dodge. And it looks like I'm probably going to get out of this future, as the future is now coming back into VWAP here, and I'm probably going to have to end this trade if we don't hold up at this level, coming back, rejecting 17,000. So it looks like I'm getting bamboozled at this trade, pardon me, unless we hold up here at VWAP, which did act as support level several times, but it looks like it's giving up the ghost now, Adair.
So there's no future in the future?
No, there is none, sadly. Not for me on the day anyway. Yeah, heavily out of the money now. I probably have to end this trade.
Yeah, it definitely fell out of that area. I can briefly discuss Carvana. I've had a couple requests here in the chat for Carvana, and I mean, Carvana was one, as you said, like Carvana breaking above that 60 was a wild. Carvana has been one that I've kind of casually had my eye on. Let me see if there's any specific news on this guy. Oh yeah, actually reached a new 52-week high when it broke that 61.61. But yeah, look at, like, this one isn't, now it's in a nice little tiny downward trend. This is actually something I might hop in on potentially later, because I like range plays, as we know, and we're now kind of in a downward range. But I don't want to underestimate the fact that this one, A, broke a new 52-week high, and B, is up almost 5% on the day. So I'm going to be very cautious and patient with this one. Daily on Carvana, yeah, I mean, it looks great. Like we kind of started, I guess, moving upward from this November 1st, 2023. And then we had, you know, kind of some movement here, almost a double top, moved back to the upside. Really nice action. Yeah, this was kind of a key area, I think, to break above this 56.35. And kind of had a double top, triple top, and then we broke it in one fell swoop today, one fell swoop, if you will. But yeah, this is a really good look on Carvana. John H. asking about Uber. Yeah, let's take a look at Uber as well, because I know Uber, Lyft was definitely one moving earlier today. Lyft on that kind of that insider selling. Yeah, like here's the, oh my God, the daily on Uber is incredible. It's incredible here to look at. We, from October 30th, November 1st, basically the same kind of, you know, momentum that we had on Lyft, consolidating a little bit at this top here of this 62, 63 around the time of the S&P entrance. But yeah, let's look at the intraday here. This is the 5-minute chart. Yeah, I always find it a little bit harder if there isn't like a clear pattern or a level. I will say earlier today, we definitely had, we're still up on the day, we're still up about 1%. We had higher highs, higher lows, kind of a bit of an upward channel up until from like kind of late in the pre-market, just before we opened, till about 10:30. This is on the 5-minute chart here for Uber. Then we kind of moved downward. Now we're consolidating a little bit in this 62.25, 62.40 area. Not a lot of range right now, but yeah, definitely could still maybe be an option. Let's look at its competitor, maybe rival, maybe frenemy, I do not know. Lyft here. Lyft, yeah, Lyft down about 4.4%. Yeah, the movement on Lyft, like we picked up right at open, then we kind of, we just broke that earlier kind of area we were touching here on this pre-market, then kind of fell to the downside. I think if we break this this area that was kind of a little interesting in pre-market around 9 a.m., if we break below this 1490 area, that could be of interest to me personally on Lyft. But yeah, a lot of these things that were kind of making moves earlier now falling a little bit to the wayside, as it often is. I think that was like one of the biggest things that was kind of interesting for me to learn as someone who really likes following catalysts. Like, you know, I'm doing the watch list every morning, and a lot of names that are moving, let's say, to the upside, that are really strong early on, are sometimes going to fall off a little bit earlier in the day. NEO was another example of something that was moving really strong off of its new kilowatt. It has, I think it was 140 kilowatt per hour batteries. That one was up really strong earlier today. Now we're falling off a little bit, right? So I guess like the point I'm trying to make is being really open-minded and waiting to kind of see what the names give you, what the stocks are kind of telling you, and don't let it decide for you. Don't try to have, like, you know, ESP with the stocks, kind of let them guide you how it's going.
Extra sensory perception. All right, guys, let's start the lesson again. It is now the top of the hour at 12 o'clock. Today and all week, we're talking about futures trading. In case you missed us yesterday, we had Steph on. She came on for like an hour and 20 minutes, an hour and 15 minutes, gave us all sorts of insight into how she structures her futures trades. If you want to have a listen or a watch, go back to yesterday's stream and start around 12 o'clock. She talked a lot about that. We're going to be talking about futures all week. Today, we're talking about spread trading and breakout trading on the future. If we can reset those topics, Chile Nightmare, that would just be amazing. All right, spread trading. This one is a little more complicated, and sometimes it involves trading the commodities, futures contracts, as opposed to just the indices or anything else. Let's talk a little bit about this. In this strategy, we're talking about spread trading. You buy and sell futures contracts of two correlated assets simultaneously, aiming to profit from the difference or the spread between their prices. For example, a trader believes there will be a glut of wheat on the market in an upcoming month, which will lower the price of the wheat in the future months. So we think our position is, our analysis shows us that likely in the upcoming months, wheat will come down in price. To capture the spread and benefit from this price shift, the trader simply sells a wheat contract for the earlier month and buys a wheat contract for the future month after the glut negatively impacts the wheat prices. If the price action follows as expected, the trader wins. So you sell short one, you buy another, and you make money on the difference. While the spread may not return as much profit as a single directional trade, it has the advantage of lowering the risk of making a one-way bet on price action. So you hedge your bets. We see this a lot. It's not completely dissimilar to what you do with options and buying equity. So you go long an equity. You can take the opposite side of that through an options put, for example, or you can do many different things. You take an ETF put for that particular industry. If you went long, say tech, you can buy puts on a tech ETF, whatever. You're basically, the point is here is to kind of hedge your bets a little bit. This approach is based on the belief that while both indices might move in the same general direction, there can be short-term disparities in their performance that can be capitalized upon. So, what are the different types of future spread trading? There's a few. There's intermarket, intra-market, and commodity product. Starting with the first, intermarket spreads. They involve multiple commodities. For example, a trader may long corn and short soybeans. Intra-market spreads allow traders to choose different monthly expirations for a single commodity. For example, such as corn, a tactic also known as a calendar spread. So when we talked about the wheat contract, for example, this would be an intra-market spread. You're taking one particular contract with a certain expiration short, and you're taking the other one long. The commodity product spreads basically replicate the underlying business product of selling a commodity by taking it from its raw form to its finished market-ready product. The perfect example of that is oil and petroleum. We'll talk a little bit about some of those tactics in a second. Traders take a long position in a raw commodity that must be refined before it is sold, such as oil, and a short position in the finished version of that commodity. That's the move there. What are some common future spreads? So some combinations that are used a lot in the market. Corn and soybeans. This is known as an inter-market spread because those are two separate markets, corn market and the soybean market. And a commodity product spread, for example, do you have something to tell me? I thought you were going to update me on your position. Crude oil and petroleum, for example, right, is an example of a commodity product spread because crude oil is the raw product and petroleum is the finished product. Similarly with soybean and soybean oil, you have the raw product with respect to soybean and the finished product with soybean oil. This is a commodity product spread. Natural gas and electricity, believe it or not, it's actually a commodity product spread because the nat gas sometimes is converted into electricity. So technically, same thing. July and December corn would be an intermarket spread, and that would be a good example of the one that we gave originally with wheat, right? Treasury notes, believe it or not, the 2-year and the 5-year, and this is something that I think hits more home for me because it's something that I keep my eye on. I keep my eye on very closely to these treasury yields, not so much of the commodities market. I'm not really a commodities trader. We've been talking a lot about the 10-year, the 2-year, the 30-year, the inversion between the two, and how to make money between the spread that's happening between the different yields, the different notes. And last but not least, gold and silver, and another very common future spread traded there. Any questions?
Yeah, so I guess my question is, for some of these intermarket, I guess, commodities, do they always have to be like directly related, or for the spreads? And for that, I mean like long corn and short soybeans.
There's got to be some correlation.
And you have to like, I'm sure you have to research a little bit too, to make sure you're kind of hedging in the right way. Yeah, it's an interesting strategy that I feel like, I think it definitely requires a lot of preparation, but it's interesting to see like the extent to which it kind of occurs. And
like what we were talked about earlier in the program with these commodities trades, I'm not saying it's an absolute necessity, but from my understanding is you really need to keep your, keep tabs on world developments, right? Because, you know, you have some sort of, what do they call this? I forget the name of it. There's like a Latin word that's used. But anyway, you have like a big event, like a flood, and all of a sudden you have a shortage in soybeans, right? And the soybeans spike up in price. And now if you know, for example, if you're watching weather patterns for a particular year, you know that, okay, well, this type of weather pattern usually causes floods. And so then the market will move based upon weather. So you have to have your ear, if you're trading this fundamentally, obviously, and not from just a technical perspective, you're going to really need to be cognizant of other outlying events.
Yeah, and it also seems like you don't have to just be aware of the events, but also like kind of that commodity, how it trades, what else is kind of being,
you saw that? Killing me, bro.
Being affected there. But yeah, no, and it's interesting too. I guess you'd probably, for commodities futures, you'd probably have to specialize in a couple commodities as well, because it seems like a very broad market, right? Like I know for your futures, you really like the NQ, right? So, and you don't really do the ES as much. So it sounds like you'd kind of have to do the same if you're trading these kind of futures, especially because there's more. So, well, I was gonna say there's so many more options, like ES, NQ. That's 2. Like we just named like 10 commodities, so it's interesting. It's a really fascinating world. Also, Sewer King in the chat, great name. Imagine investing money based on weather patterns.
I mean,
it's just one factor.
It really is. I mean, you make it sound like it's a joke, but like a lot of the oil trades really have to do with geopolitical, factors here. What's Saudi doing now? Who's Saudi beefing with? Are Saudi and Iran gonna scrap? Like, the ships that are passing through the Suez Canal and through the Red Sea, they're getting attacked. Like, I mean, you make it sound like a joke, but literally, these are the events that affect the price. Now, as a technician, you may not care. You may look at the chart, you may see support, you may see resistance, you may see a chart pattern, whatever it is. All you need to know is that there was an event and the event has moved the price. Now the technicals are going to speak to you. Not everybody's like that, right? Some people, they're gonna base their models differently than just strictly on technicals. There's a whole body of investors, Adara, that base their choices of stocks on fundamentals, and they use technicals for getting in and getting out.
That's smart, yeah, like that, and that's one way. I mean, there's no right way, as we were saying. Like, Sharif was talking about whatever floats your boat. It's the same thing too, and it's also interesting with regards to Sewer King's comment as well. It's like, you know what, we might kind of think it's strange that future traders are paying so much attention to weather patterns and stuff like that, but also futures traders might think it's weird that we pay so much attention to analyst moves, right? Because that's what moves assets. So it's really, you have to think about in terms of, and I think it's a really, I enjoyed your comment, Sewer King. I'm not picking on you at all. I'm just saying that I think it's an example of like how your perspective is going to be so different depending on what you're trading. And I think it goes back to me realizing today, I think the extent that there are, a lot of similarities and I think some kind of parallels to be made between futures trading, because they do have catalysts. And I appreciate you bringing that up. The catalysts are just different kinds of catalysts.
They are.
Than what we're going to see with our assets. Like, like this thing is, we had an upgrade on this thing, or, insider selling with the example of Lyft today, right? they're all different kinds of catalysts. So I think, yeah, I just thought I wanted to put that out.
Agreed.
Also, since Pop Boy, whatever wets your beak.
Hey?
Whatever wets your beak instead of whatever floats your boat. So yeah,
Slow
I enjoyed
clap
that.
for that too.
There you go.
Soft clap, slow clap, whatever.
Slow clap, clap.
Walks and all. I like that. That's a nice name, walks and all. Most industry comes from nature, around 70%. During times of adverse weather, human output declines.
Whew.
Bang on, absolutely. And we know, now I'm not trying to get all political on you here, and please don't at me, but there was a whole thing about this year being El Nino, this and that. We're supposed to have warmer weather. Whether or not that has any effect on, these commodities is beyond my scope of comprehension. Just throwing it out there, kind of using that as an example. Next topic, Adara, breakout trading. This is more down my wheelhouse here than spread trading. Before we discuss these strategies, let's take a moment to detail the specifics of a breakout. Breakouts occur when an asset's price moves out of an established trading range. This movement is typically accompanied by an increase in volume. So look for a confirmatory indicator. The general idea, as simple as it gets here, is to go long when the price breaks above resistance and go short when the price breaks below support. Sounds simple, right? Breakouts are a core focus of traders as they typically signal impending volatility and the possibility of significant price trends. Breakouts occur in any type of market and can be tracked with breakout trading indicators such as flags, triangles, inverse head and shoulders for the more long inclined individuals, along with conventional channel breakouts. When identifying breakout opportunities, it is generally advisable to look at assets with well-defined support and resistance levels. Pre-breakout pressure or price action squeeze, for example, is another common identifier of potential breakouts. So when I showed you that chart on the ES that we were in such a long consolidation range, where is my ES chart over here? Man, I'm always losing my dang charts. Hold on. Here they are.
They're running away from you.
Yeah, clearly. On the ES, let's go to the 4 hour. We talked about this. Look how long we were consolidating here below that 46.50, and then boom goes the dynamite. One rejection off 46.50, another couple over here, and then finally you get the break on this occasion over here on the 11th of December. So a lot of accumulation between that 4600 area and the 4650. Look how long we moved sideways for, and then you had the eventual breakthrough, okay? Clear support and resistance levels on that bad boy. This occurs when higher lows are formed when resistance is being pushed, or lower highs where support levels are concerned. While it's possible to trade on the simple principle of go long above resistance and go short below support, experienced traders go a few steps further by analyzing breakout strategies in greater detail. One example, one of the primary hurdles traders encounter when attempting to trade on this strategy is the presence of false breakouts, or fakeouts as they're called. Okay? These occur when an asset's price appears to be moving out of a range, but actually ultimately reverses. Put up your hand if you got caught in one of those today. I did 17,000 on the NQ, and now I'm down. Okay? This is a common trap and snares many newer day traders. So let's talk a little bit about some of these breakout trading strategies for the future. The first one that I like particularly here is called the second chance breakout strategy. One way to potentially sidestep the continuing problem of false breakouts, or fakeouts as they're sometimes called, is by following the so-called second chance breakout strategy. In this case, a trader waits until a legitimate breakout occurs, but only enters a position after the price moves past that resistance level and then retests the original breakout point. So if I had followed my own advice today on the future, and now it's time to, get down on myself over here. Let's look at the chart. If I had followed my own advice, Fabian, at this 17,000 point level on the NQ and waited for like a 17,025 before getting long, and getting so excited that I punched in long over here, I would have actually taken it somewhere maybe at 1705, 17,000 when it made its way down. Lo and behold, it never made it to 17,025, and so I'm not following my own advice on this particular move. That's fine. All right. So what you're looking for here, what I would have wanted to see personally at, to get in ex post facto, looking at it from hindsight, a move far past 17,000. You could even dance around there for half an hour, come back into 17,000, show clearly that buyers are overwhelming sellers at that critical support level. Show me proof. In this case, I didn't get any proof. I just punched in long. This was a mistake. This was a bad trade. Okay? And before I get long, that's what I would have wanted to see. A clearing, a very decisive clearing of that resistance level at 17,000, and then an eventual retest of that level, showing me that buyers are going to overwhelm sellers at that level, and we are going to hold the general 17,000 point area. It should be noted that such retests do not always occur. So sometimes, if I had waited for 17,000 to clear by a decisive amount, it may not have given me a 17,000 retest. It may just keep going, and that's part of the overall, cost-benefit analysis that I have to do when I'm trading. Additionally, a trader need not wait until the price breakout point actually is reached. So I don't have to actually wait until 17,000 comes back in after moving up to 17,025 or 17,030. It can be at 17,005, like 17,005, for example, right? It doesn't have to actually come back right into 17,000. It can come in around that general area. Yet if a breakout does retest the original price point, it gives a trader a second chance to trade on that movement. Stop losses should be employed here, obviously, to minimize any potential downside, and that becomes very nuanced in and of itself, where to place stops, and we talked about that when we talked about making a trading plan earlier in the month. The core benefit to this approach is simple. Rather than having to deal with maddening procession of fake breakouts, traders can instead exercise patience and trade on a proven breakout, something I didn't do today. Last one we're going to talk about here with respect to breakout trading strategies for the future is chart pattern strategy. Like basically what it sounds. Another essential strategy involves trading on chart patterns involving the breakout trading indicators mentioned above, rather than the simple trading ranges. Basic chart formations such as triangles or flags tend to be better breakout trading indicators than simple range spotting. So this one doesn't like my particular wicking dance here. It says that the patterns are better. I tend to disagree a little bit with that. At least from my very limited futures trading, I definitely like levels a lot better. Goes on to say triangles come in three forms. We know that from our week on chart patterns: ascending, descending, and symmetrical. These varieties simply describe their appearance on a chart. For trading purposes, however, they are largely the same. Triangles form on a chart when the price movement narrows across price swings tracked over an extending trend line. Triangles can represent both continuation and reversals of a pattern and are present in uptrends and downtrends. Charting triangles is often helpful because it provides an easy grasp, visual representation of price action and how larger trends are developing. Analysis of triangles and other chart patterns can also help traders spot breakouts with greater precision and manage their positions with greater insight. Personally, what I like to look for on triangles is just showing me where the direction is going. If I'm looking at a chart and I'm seeing consistently higher lows, like I did earlier on here on the future, where we had that 16,960 touch, that was the trough there. And then we got a 16,965, that was the trough. And then we got all the way up to 16,985, that was the trough. So it was a higher low, higher low, all the while accompanied with higher highs. Now, you may not always get the higher highs to correspond with the higher lows. Sometimes you're only going to have higher lows and you're going to have a flat top. For example, a flat top could have been at 17,000 here. That would have been an ascending triangle. But in this particular case, we have an ascending channel because we had correspondingly higher highs with higher lows. That's not always the case. So the point is here, what I'm looking at the triangles for is who's overwhelming who. In this particular case, I know for a fact that we had incrementally higher lows. The buyers were in control and overwhelming sellers on every incremental drop in price. So that's what I look at it for. Okay? While false breakouts are certainly an annoyance, some traders attempt to use their advantage by following a false breakout trading strategy. Though that's a technique that's best employed by those with a sophisticated grasp of breakout trading fundamentals. Essentially, what you're looking for is to go short on a false breakout. That's not my style. I don't know how everybody else feels about that, but that's not really one that I subscribe to. I want to go with the trend, not against it, Adair.
And so you would kind of confirm a false breakout if basically there's like a breakout without volume or something, right? That might be an example of a false breakout?
Well, there may be a lack of volume in the false breakout. That may be a characteristic of it, but that's not the number one thing I'm looking for. Okay. So if we had like an attempt at breaking 17,000, then we have that wicking dance where we wick above 17, wick above 17, and then we close below 17, then all of a sudden we retrace back into 69. Well, I'll know for a fact that that was a false breakout.
Okay.
You see what I'm saying?
So it's kind of like what we had with Tesla earlier today too, where we kept trying to break above. I'll pull it up, where we kind of had this continuous wick above that 258 and then kind of failing it. And then it ended up kind of being a move to the downside after that.
Yeah, and you didn't get a hold of that VWAP either.
We did
not.
You had
an initial, like, hold on. So what I do like about this is, look how, you mentioned this earlier.
I mentioned this earlier,
so that's a clear crest. Can you highlight that point so people can see it? No, this one over here.
Oh, here.
Where I have my finger.
Oh, sorry.
Yeah.
Here.
So that's a clear crest, right?
Yeah.
And then you retrace down, and then you break that crest. So we know for a fact this part here is a crest. Now, look where
oh my gosh.
You see what I'm saying?
That's so cool.
So it comes back into that level and holds it on 1, 2, 3, 4, 5, 6. On the 7th time, it breaks down.
Yeah.
Right? So it's not a hard and fast rule. Again, the smaller the time frame you're trading on, the more likely it is to be subjected to failure, right? On whatever you're looking at.
I appreciate that. Thank you so much. Yeah.
What is this? This is so random. Look at guys. Look at the poll that the Chilean Nightmare put in the chat. I mean, we didn't even talk about game shows today. I don't know what him and Ram are talking about over there, but like, oh, I just got some knowledge put in my ear. I'm not gonna say it out loud because it seems like it was a surprise. But which? Yeah, they're gonna get. The Katina man is gonna vote the Price is Right. Oh, really? Okay. No.
I think it's Jeopardy.
There's no Wheel of Fortune option, is there? It's just 3. Jeopardy, Family Feud, and The Price is Right. Yeah. I like The Price is Right because you kind of like get like this constant flow of different games. Exactly.
Yeah, my dad's a Price is Right fan.
Yeah. I'm gonna have to click The Price is Right. I think we have a 3-way tie almost here. We're really close. There's really no outstanding winner. The Price is Right is winning so far, but I don't know if we'll see what it does at the end. Only 141 votes. Come on, people. Let's get those votes up, baby. There we go, 150 votes. Let's get those votes up and tell us what you feel. Sharif, wouldn't it be good to trade the SQQ now because the market is so high and the SQQQ is at lows? This being said, trade SQQ to the previous bottom and stop out below it. Personally, look, I don't trade the SQQ, SQQs, or the TQQs. All my levels, honestly, are based on the NQ contract. So I can try to give you an assessment of how I feel about the SQQs in the particular moment, but my levels won't correspond unless I try to, peg them to levels on the chart on the SQQs. I personally feel the futures contracts are more important because they are more closely followed by large money institutions looking to hedge bets and take positions. I feel, the other ETFs, let's call them that, are more retail oriented, and that interests me less than what institutions are doing. So I personally, everything that I'm going to tell you is going to be based off future contracts level, whether that's for the ES or the NQ. Any questions with respect to breakout trading strategy, whether it's the second chance bounce back or it's the chart pattern? Adair.
No, yeah, I think I don't think I have any questions at this time. I just think it's interesting that they're both kind of strategies we do use in trading equities as well. So it's just kind of how you adapt them to futures, especially with regards to, I know as someone as yourself who doesn't really enjoy patterns, you might take less stock in that, or for futures, I mean, you might take less stock in chart patterns for futures, but but then also, like as we were saying earlier as well, there could be like, sometimes it's strong if there's confluence between like a pattern that exists and also key levels. So I think that's interesting. In general, yeah, I don't think I have any questions on this one right now. I think I asked some of them earlier on those, but yeah, I do think it's interesting just how many overlaps there are and how many similarities there are with these kind of futures related strategies that there are with assets as well, not necessarily spreads with regards to the breakout trading as well. And yeah, I think too, with breakout trading, the second chance breakout, I always feel like it's a little bit hard too, because you don't want to just get in on FOMO, right? So you want to, I would say just wait for that confirmation of that move before hopping in. Personally,
that's the strategy that I like, to clear a level, show me you're going to clear the level with a good amount, and then I'll wait for it on the second chance. But I don't know if you got Kat's message about the Benzinga.
Yes, I did.
Because we've got a new code for that one.
I am ready
you're going to be all over that.
Go here. I did get the message. Here we are. Here, let's talk about Benzinga. Like, look at this homepage. NASDAQ 100 hits record high, set for best annual performance since 1999 tech boom. Look where I got that headline, guys. Benzinga. So we are brought to you by Benzinga Pro, and you can just sign up today for 50% off their premier news and research platform for retail traders with code TTV, capital letters. And you can just use the link in the description to go to checkout. I mean, look at this homepage. Novo Nordisk collaborates with India's online marketplace. Like, maybe I'll look at Novo Nordisk now, things I would not have known had I not seen this homepage. Like lots of different types of research, lots to look at always here. And as Sharif is always saying, I am always looking at Benzinga, always open here. Here we go. Here's my other Benzinga, this Benzinga Pro. I was looking at Carvana earlier. So many news in like options trading. Here's Uber, some news on Uber. Uber for Business has announced it's integrated with leading expense management providers, like all this different kinds of news, stuff you never knew you needed. I am, as you can tell, and as Sharif is always mentioning, I am very much a user of Benzinga.
Yes, and we should mention that Benzinga, because we're going to be doing a week on this, has a chart scanner, it has a news blotter, it has a watch list creator, so many different options on Benzinga that you can use. So like I personally use my own platform just because I'm used to it, but Benzinga's got all that stuff and more, Adara. And you use that stuff every day.
Yeah, I really do. Like it is also hi to Kat in the chat as well. But yeah.
Kat in the hat's killing it, yeah. Can we get Kat in the hat? There she is. There's the back of her head. And then we got the Kenobi as well. The Kenobi's there, baby. Do you want to share your current position, Kenobi? Kenobi is not in any current trades at the moment. Say that again. Patiently waiting. Are you waiting for the Amazon? No? He's waiting for a trade to set up.
He's so good at like teasing. Like he won't he'll be like it's coming up. Like the art of like the non-spoiler. Like he could work for like the MCU or something with like the non-spoiler, like hinting at what's to come.
Don't worry about what I'm trading, bro. I'll let you know when I'm in a position.
Yeah.
Shout out to the Kenobi there. Let's look at some of the daily movers that we earmarked today that were strong on the day. We always look at the Mag 7, but like I mentioned earlier, Nikola strong, Mara strong, Carvana, Neo, Affirm, AI. Look at Affirm, man. Affirm hasn't given up the ghost. I would say Neo and Affirm looking the strongest of these six so far because they're holding up a lot better. Like, look at this breakout trade here on MARA. We took it from 20 and a quarter all the way up to 22 and a half, and now we're back into 21. So it's kind of giving up the ghost. Likewise with AI, given about $2 off the top there, 33.91. We're at 31.90. Neo looking real good, holding towards high days at that 880, high days 890. Likewise with AFRM. AFRM is about $1 off the highs, but it's such a big move off that $44 from yesterday, $44 level from yesterday. So what's a dollar or two off the highs. Still very much above VWAP, and VWAP has absolutely been a key area of support on Affirm today. Look at all these dips into VWAP, all of which have been bought up. At least initially we were getting touches. Now the dips are just a smidge above VWAP. Not lately. The last one to touch VWAP around an hour ago, Adara, when we got into that 11:25 time slot, we almost touched VWAP there. Affirm getting a big boost today from its news with Walmart that it is going to incorporate its buy now, pay later service at the check-in at about 4,500 stores, at the self-checkout, pardon me, at 4,500 stores. So not just online, it already had it online. Now you're going to actually be able to do the BNPL later on. I mean, yeah, at the actual store itself, not later on, at the actual store itself, rather than having to do everything online. Affirm breaks out here again, 54 possible today, says Arhan. Okay, there you go. You heard it there. That's Arhan's opinion there. AJ, Sharif, do you think NVIDIA hits the bottom and then is ready to rebound? Thank you for your insight. Love the show. Thank you, my man, or I'm not sure if it's a man or a woman. AJ can go both ways. But let's have a look here at NVIDIA. So I mentioned a little bit about NVIDIA at the top of the show. We were looking at the chart yesterday, and we saw that NVIDIA had broken 500 on 2 or 3 previous occasions, all of which basically had the day after that selling off. So it hasn't been able to hold that 3-day rule above 500. So yesterday we closed out, we got higher, but we closed out yesterday at that 503/4 level. We gap up in the pre today at about 502 and change, and then it's a big boom to the downside starting at 630. We made our move all the way down to 492. We even got to 488.95. So again, we're having trouble holding that key resistance of 500, despite making it all the way up to $504.25 yesterday at around 3:30 or so, just as we were ending the day there on NVDA. So haven't been able to hold above 500. Whether or not NVIDIA curls back up into that 500 area, I don't know. I don't see it in the cards today. But what I see is a series of lower highs here on the 5-minute being met with higher lows. So a bit of a compression pattern on NVDA as the price range definitely tightens up from the open. So you have the IB high there at 497 exactly, with the low being at 488.95. So say 489. And then each successive crest and trough is either a lower high or a higher low. So a bit of a compression pattern. Now, what preceded this compression pattern is a bit of a down move. So, you know, I don't know what the stats are, but I'd be looking for this to break to the downside. It's already down 1.7% on the day. NVIDIA is definitely the biggest laggard out of the Mag 7. The only other 2 stocks that are down on the day on the Mag 7 is Microsoft, which is down 0.22, and Amazon, which is down 0.21. NVIDIA, the outlier here, at 1.7% south. So I wouldn't really hold my hopes on a 500 touch today on NVDA, but who knows? The market could absolutely change that, especially if the NQ starts rocketing to the high side. Maybe we get a move up on NVIDIA, but I would say look for maybe a move down to touch the low of day, just based on the compression pattern that we have now and the trend that preceded it, which was a trend down. So interesting look on NVIDIA. I'm sure we'll probably eventually get that 500 break and hold, just maybe not today, maybe in the new year, or maybe even sometime next week anyway. We've been definitely having a hard time holding above that $500 on NVIDIA. Why Brothers United? Asking myself and you, when are you teaching us TPO and reading level 2 data, please? Good question. We haven't really scheduled a time for that, but we will. I think it would be really interesting to have a lot of the traders on the floor who are basically, really practicing their level 2 data reading to come up and tell us what they're seeing, because yeah, it would be, because that's what they really push that in the education on this floor, is really how to read level 2, especially for equities. Maybe not so much for futures, obviously, but definitely the equities. Yeah, thank you for that, Y Brothers. We'll be talking about that, and we'll have a date for you hopefully soon. Every week comes with a new topic, as you know. Ponzi Fonzie. What's the Bugatti minivan trade, bro? Thank you. I love that, dude. Hold on. Aren't those like two opposite things, like the Bugatti and minivan, or you just did that on purpose?
Maybe
right?
one's the Bugatti trade and one's the minivan trade.
Can you imagine Bugatti made a minivan or like an SUV? They wouldn't.
I mean, it'd be a cool Lamborghini
would make an SUV. They did. The Urus. And I think Ferrari has an SUV now, doesn't it?
Now I have that song in my head again, the one you were singing this morning with the Ferrari.
What?
That song's in my head again.
Oh,
now.
yeah.
Da, 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 da,
Every morning I come in with like with an earworm, right?
Every morning.
Literally, yeah. And it's either Neil complaining or you complaining.
I'm not complaining.
No, not commenting. Yeah. I don't know. Yes, Ferrari does, says D-Loaf. Yeah, I'm pretty sure I saw Ferrari come in with some. We know Bentley has one, Rolls-Royce has one. So is it just a matter of time until Bugatti comes out with an SUV? It's what the people want, baby.
The Ferrari minivan's kind of cool looking, actually. I have to say.
Is that real? That's not a mini. That's not. No.
I don't know if that's real. Maybe not.
No.
Never mind. I was easily clickbaited.
That's all good.
But yeah, that'd be cool.
Lamborghini has SUV. That's what I said, sir. It's called the Urus. Yeah. Anyway, markets are barcoding. How old is Sharif? I'm 41, baby. 41, old AF. But what's that? Damn, the Kenobi says. Best van is still the Honda Odyssey. I had a lot of good times in high school in the back of the Honda Odyssey, my friend's car. So I'm not gonna say no, because well, anyway, the Chilean Nightmare is going nuts with like all the things. What's going on over there, dude? Oh, it's not the Chilean Nightmare, it's Ram Ram's on the 1s and 2s now. Very soon, I will have access to the camera that shows the production team. And I will be the only one able to control it. So when Ram goes on a tirade, we'll be able to put Ram on camera, and we'll be able to. And I think they want to give her a mic as well, so she can chime in, right? So it's gonna be very interesting there once we get Ram mic'd up and cammed. So yeah.
Ram on the cam.
Yeah, exactly. Sharif rode horses, says JK. Yes. Just not as a means of transportation, but for leisure. Yes, I have. I know what you're trying to get at there, bro. I know what you're trying to get at. All right. Oh, go for it. Oh, we actually have the button ready? Oh, go, Ram. Go back.
Say hi.
Say hi, Ram.
She's very shy.
I thought you were
Yes, I
bluffing
love
when
it.
you said
No, I
that.
told you I'm gonna have access to that camera, and she won't be able. I'm gonna have an override switch. So if she tries to take it off, I can override her switch. No, I'm just making stuff up now, guys. All right, the chat is loving this.
I'm just sitting like stunned. Like I had no idea there actually was the Ram
No, yeah.
cam.
I thought it was gonna be this camera over here. I didn't know it was gonna be like a direct face on camera, like they just had.
It's like
That's
a
even better.
close-up.
Yes. Anything to add, guys? Anything to ask us? Because we're gonna restart the lesson at around 1. They're gonna run it through this time, but from now until then, I don't have any trades. I got slapped in the face on this futures trade, so I'm still recovering from that. Don't want to take anything unless it's an A+ setup. And personally, right now, I'm not seeing any A+ setups, but I got to send it to you because my mechanic is calling me with my winter tires.
Absolutely. So Elon in the chat here asking, hi, Sharif and Adara. Hello, Elon in the chat. As there have been quite a lot of rotations recently, would your platform consider systematically providing updates in each industry category? Yeah, that's a really interesting idea. I do not know how that would come about, and I do not know if I do not think I'm the person that would make that happen. But yeah, I think that's a really interesting point. I will say as well, what I kind of use to get a vibe on what sectors you're doing is if you just look up like stock heat map or CNBC sector watch, they'll have kind of a list of what sectors, they're doing what at each time, right? So I think that's definitely interesting. Also, yeah, someone mentioned my Tesla short. I'll talk about my Tesla short. I got out of that because I accidentally added to the position. And my whole goal was I was trying to take advantage of these wick movements. Again, we're doing the scalpulations. Ironically, we're actually where I wanted to get out of that short. Yeah, so we lost a little bit here, unfortunately. But yeah, my whole thing too is when I do the fat finger kind of trades, I like to just get out of the position rather than, dilly-dallying, because I did have a situation with, I believe, it was last week, Eli Lilly, that went a little awry. But yeah, I mean, if we break below, if we make a lower low here on Tesla, I could be, scalpulating my way back into a short here. Also, yeah, I'm just joking. So when I say scalpulation, it's basically just me kind of trying to make these calculated scalps. And when I say that, I mean, I have a level in mind, but if I do, and it's usually pretty short, I don't like to take more than 50 cents to maybe $1 on these moves. $1 is usually going to be more a mega cap that'll run a little bit more. But anyways, yeah, and then if I see resistance on the tape, I'll really keep my eye on the tape, and I kind of let the tape dictate sometimes where I get out. So there's these very calculated scalps. Some mentions of Intel in the chat, so let's get the Intel on Intel. I was not going to resist the opportunity for that trade. Oh my gosh, Intel, hello.
What is happening with Intel here?
Intel flew? Intel flew.
Is that the 3-minute?
That is the 5-minute. Yeah, let me see.
All right, I have to look this up.
Yeah, Intel's having a moment and a half.
They disclosed a very important
Oh, Sean, yes, I love it.
That's right down your alley.
That
You
is-
should probably say that out loud.
Yes, so Sean just said, shout out to Sean with the amazing pun. They disclosed some very important intel. So I loved that. I was saying earlier, let's get the Intel at Intel. Oh, I just caught the flip.
I don't see a headline on it, to be honest with you.
I don't see any Intel on Intel.
No.
But I mean, what I can say is it looks amazing. It looks really good here. I'm on the daily. Yeah, Intel has definitely been continuing to run to upside over here. Yeah, no, on the daily, it looks really good as well. We were kind of in, we broke this we had like a little bit of a high here at this 46.10 on the day. Once we broke above that, there was no stopping Intel. We're now around this 46.60 area. If there's a dip opportunity, I could be intrigued. I could be enticed. I could say hola to this trade here. But yeah, so Compass Direct saying Intel short on. I mean, yeah, I would say Intel looks pretty strong, especially as we're breaking over this 2%. But yeah, I think, always if you have risk management strategies in play. But no, I would say Intel looks incredibly strong as of right now.
Yeah, we're knocking on the door of 17,000 yet again on the future after that big move down through VWAP. We held the general VWAP area, not really. We did break below it, but most of the closing prints were just at that VWAP area here on the NQ March contract. And now we're knocking the door of 17 again. This will be the umpteenth attempt at 17, all of which so far have been rejected. But one very notable thing is that we've continued to put in higher lows throughout the day in this build-up approach to 17,000. Whether or not we get a decided break and a hold above 17,000 on the day, or we have to wait for sometime later this week. We'll have to wait and see. Here we go again, 17,000 incoming on the future. Nothing that I'm going to do at this level. I've learned my lesson. I got to let this clear, and then we're going to try to take it back on the second chance type trade again that we talked about earlier. Dara's going to get to that in about 15 minutes or so when we review the teaching materials. But yeah, 17,000 coming into play again on the future. Anything outlying here I can speak of? Look, we had Meta. Meta had a really strong day today. It's kind of really off its highs, about $3 or even more off its highs at the moment. Got into that 353.60 high a day. It was looking like a hell of a bull flag here that was forming, but that just goes to show you, just because if you think you see a bull flag doesn't mean it's going to manifest into one. And then you had, the eventual breakdown. We tried to hold 350. 350 was an absolute support level all morning. Now it's kind of given up the ghost. This last 5-minute candle here decidedly broke south of 350. Now we're straddling 350 from the downside rather than from the upside. So Meta kind of given up a little bit of the move, but it's been very strong on the day, especially relatively speaking, when you haven't had an outsized move like this on any of the other names. Meta, by the way, is rivaling Tesla right now for highest up on the day. Tesla up 1 1/3, Meta up 1.5 percentage points, followed by NFLX, if you want to include NFLX in the Mag 7, which I don't, but you know, it's a FANG component, and the FANG.
It's part of the FANG.
The FANG was like the first version of the Mag 7. And then we expanded the FANG 6 into the Mag 7, right? The question is, what's going to make the Mag 10? So what are those 3 other stocks that will be? Is it going to be Uber?
I'm excited.
Who is it going to be? And so that's like, a lot of people want to know which one is going to be like the big Mag 7, or the biggest of the Mag 7 in 2024. I think some other people not really looking at that question. They're like, yo, what's going to be the Mag 8, the Mag 9, the Mag 10, that other component, if you believe in that. Yeah. So that's going to be interesting. This Shoon Moon keeps yelling about Mara. You want to have a look at Mara?
Let's see if Mara's doing a marathon today. That was a very bad pun. Here is
Shoon Moon.
Oh, okay. Hello, Mara.
Whoa.
Goodbye, Mara.
What the
Of.
hell
I mean,
is
we're
that?
still up. So yeah,
Christmas tree.
That is a Christmas tree
Tis the
retracement.
season.
Yes, thank you. 'Tis the season. Yet not a Santa Claus rally for Mara, or maybe it was earlier today. Now it's kind of swooped down here. I cannot believe we're talking about Mara at like a 22+ level, because when I started, Mara was at like $8.
Right.
So yeah. What a world in which we live. But yeah, it looks like we're trying to do round 2 on Mara. We'll kind of have to wait and see how this goes. Still up 7% on the day, but we fell off from this 22.30 area, so that was around 11:45. Swoop down to about 11:20. So this is like, let me see here. This is over 30 minutes of just straight downside movement here. That would be a beautiful short if anyone got it there. That's $1.50. Then we kind of, maybe we'll have, I don't even want to really call patterns on this, because this one is so up on the day, but just came from a downtrend. So it's a really unique kind of situation we're talking about here. It's almost like a black swan event, but like intraday for a chart. It's a very strange scenario. But yeah, I mean, in terms of levels, Mara's still kind of a far ways away from any more recent kind of price movement, because it just had, when Bitcoin runs, so do all, I said Bitcoin so weirdly, when Bitcoin runs, so do all of these adjacent stocks, right? So Mara has been running as of late, but yeah, I would say you kind of more have to rely then on the intraday movement. I would say, yeah, just keep an eye on levels. Right now we're kind of chopping and turning a little bit to the downside. I would say this one's a little bit hard to read for me as of now. Other than that, as you put out there, Sharif, that 'tis the season Christmas tree retracement. Yeah. Shout out to Randy.
Randy, yeah, he came up with that bad boy. Yeah, I want to complain a little bit right now. So I just got the call from my mechanic about my winter tires being put on. And the winter tires are great, nothing wrong with them. However, one summer tire is going to need replacing. It has a break in the wall because it's a low profile tire. Thank you, City of Toronto. My tax dollars at work. Anybody who's driven around the city knows the piss poor state of the roads. You can't even drive anything nice around here anymore, man. You can't have anything nice around here. Like, everything's busted down. I'm sorry for venting out about that. Say that again, Chile Nightmare. That's what the tire does. It goes bang. No, thankfully this one didn't go bang. It has a break in the wall, but it's not seeping air at the moment. No way to repair it, sadly. So there you go. One tire out the window. A new one's got to come in, and that's going to be umpteen amount of dollars. Let's not even get into that. But yeah, anyway, don't drive nice cars in Toronto. Waste of time. You might not be wrong on that. Anyway, yeah, NVIDIA's doing nothing, my man. Why are you yelling about NVIDIA? Well, actually, no, I think I maybe spoke too soon a little bit about that.
Kind of breaking out of that area.
Yeah, and good call on that, actually. Sorry to disparage you there, because we were talking about this one being in a bit of a compression pattern, and now it is rivaling that recent high. No, come to the chart. This 494 area was where we topped out last time. We're 493 3/4, and we're making that move right now. So if we can break above this high, this will be interesting here to see if we can retrace maybe and a $500 retest or whatever, anything in that particular region. We'll have to wait and see. I'm not going to jump the gun on NVDA, but we know we have higher lows all throughout here. The only thing that holding us back was this lower high, not knowing which way this was going to break out. Was it going to be a break up or break down below this bottom trend line? So NVDA doing things, still down 1.5% on the day. Kyle Burdett says, easy boomer. Elon says, really, Sharif, can't be worse than New York City. I don't know, man. I haven't driven too much in New York City, but I can't imagine it can't be that much better. Some of these comments are hilarious. Yeah, Diamond Realty of Miami. I'm not going to read that out loud, but I'm nodding my head, which is, yeah, okay, okay. Mr. Love Shack, yeah, if your car is all-wheel drive, it might be a replacement of all four, although you just got it, so it might be 2 tires. I own a car shop. Yeah, hopefully that isn't the case. There's not too much on them in terms of kilometers, but yeah, it's just tough. Someone didn't have their Scrapple. Yeah,
That is roasting.
Yeah, we had to look at Scrapple yesterday, which was hilarious. I had no idea what that was.
Loaf.
Shinobi, can you look at GME long? I'm long 1765. Sure, let's have a look at GME for you. Let's load up that bad boy. Yeah, I haven't had a look at GameStop lately. Let's go to the 5-minute on GameStonk. He's long 1765. All right, so he's long right here. Big move down, held for whatever reason at 720, but the real print, it looks like, was around that 750 area where we really found some support. The closing print from yesterday, so the key level of possible resistance is going to be 1786. That is yesterday's close with a high of 1859 done on the opening range break. Look, I don't see anything that I would particularly like on GME today. It's not my cup of tea based on the setup, but if you're looking for a possible profit target, possibly the 1786, that's the closing print from yesterday. And it is also the low on the IB high, or the IB low right there. Otherwise, I really don't see anything on GME that would get me too excited on the day. Let's look at yesterday's price action. So do you have some support around where we found the bottom today? Yeah, not really. It's yesterday's opening range, I guess. So we kind of gave up the entire move. Let's look at this on a wider time frame. Let's look at that half an hour here. Yeah, possible double top. I'm not really... Yeah, this $17 looks like it's a hell of a support area after we broke through it on December 14th, but not much else that I can really opine on GME. John Del Segno says Piton breaking out on the 5-day. Let's look at Piton. So this is a 30-minute look here. This takes us all the way back to November 30th. We had a fantastic day on Piton, I would say 2 days actually, December 13th and 14th. Both were good days for Piton. We definitely found resistance around that 6.5, 6 2/3 level. We're kind of like in the mean, in between the breakout and the breakdown area. Held $6 yesterday, held $6 again this morning. So $6 coming into play here as a level of support previously. $6 was resistance for multiple days, whether it was December 7th, 8th, 11th, and then again on the 13th before giving up, getting broken through on the 14th here. So I would say $6, interesting area to get a possible long, but we do have some lower highs coming into play after that peak we made on the 13th and then in the pre-market on the 14th, pardon me, and then in the pre-market on the 15th. So personally, I'd like to buy this off 6, maybe with a tight stop at around 590. I don't really have a plan for it at these levels. We're kind of in no man's land here. All right. You wanna go through the lesson?
Let's do it indeed. Yeah, I am.
Hold on. What are you short? The Katina Man is short the entire everything. Katina Man is taking everything short, so he's short inclined here on the market for anybody following along with the Katina Man. He's short Tesla at 255.30. He's short Amazon at 253.80s. So the Katina Man looking for a 17,000 rejection. And he just shorted Uber now at 18. So anybody following along with Sean, Just wanted to update you there. Sorry, Adair.
Yeah, no worries. I am sorry I've been in my Tesla 256 short, but c'est la vie. Life is what life does, and we have to, risk management principles exist for reasons. And I also accidentally re-upped there, so I had my reasons for leaving. But you know what we do have reasons to talk about here? That was a terrible transition. Futures trading and strategies. And so we have two strategies we're going to talk about today. I'm just laughing at that transition I made. And spread trading, one of the big ones here. So spread trading is actually kind of not what you think it is. It's a little bit different for the world of futures. And so in this strategy, you're basically buying and selling futures contracts of two correlated assets simultaneously. And the goal is to profit from the difference, or the spread, if you will, between their prices. So for example here, a trader believes there will be a glut of wheat on the market. So much wheat in the upcoming month. And so that will lower, in their mind, that will lower the price of wheat in future months. And this is like an example, right? This is a hypothetical here. But to capture the spread and benefit from this price shift, the trader basically will just sell a wheat contract for the earlier month and buy a wheat contract for the future month after the glut negatively impacts wheat prices. And if the price action follows as expected, the trader wins. So basically what happens is, so they're going to, what happens is they'll sell the wheat contract for an earlier month and then buy for the later month when they think that glut will be, and that'll be after the glut negatively impacts wheat prices. And so if the price action follows, the trader wins. That is the quick little, that's the quick take there, the vibe with spread trading. So the spread might not return as much profit as a single directional trade. It has the advantage of lowering the risk of making a one-way bet on price action. So instead of having a chance with one trade, you kind of hedge your bets, if you will, with two trades. So a little bit different there. This approach is based on the belief that while both indices might move in the same general direction, there can be short-term disparities in their performances that can be capitalized upon. And there are different types of future spreads as well, which is a new thing I am learning here. We have intermarket spreads, intra-market spreads, and commodity product. So intermarket spreads, these are ones that involve multiple commodities. So for example, a trader might long corn and short soybeans. And this is where it comes up again. I was asking Sharif when we were talking about this. I said, I guess how cognizant do you have to be of the different markets in order to do future spreads effectively? And we were saying like it's definitely one of those things where you're going to have to be kind of aware of the catalyst, aware of what moves the market in these ways. So yeah, but if you do have that knowledge, then you can maybe do some intermarket spreads and do that more effectively because you know what will move in tandem or move opposite one another. Intra-market spreads, this is when traders will choose different monthly expirations for a single commodity. So for example, let's say you want to go long 1 month of corn and short a different month expiration of corn. And so this tactic is also called a calendar spread. Last but not least, in terms of the types of spreads, we have commodity product spreads. So these will replicate the underlying business process of selling a commodity by taking it from its raw form to a finished market-ready product. And so traders will basically take a long position in the raw commodity that has to be refined before it's sold, such as oil, and then a short position in the finished version of that commodity. So basically, the commodity product spreads you're going long on, for example, the raw version and then short on the refined version. So it's the same product, but two different versions. So it's different from the intra-market, which is when it's the same product but two different contracts. So yeah, so a very interesting take, and I think it's definitely something that requires a lot of nuance, as Sharif was touching on earlier. But yeah, really fascinating to learn. And so what are some common future spreads? And again, this is the kind of the knowledge of these spreads will require a lot of learning and a lot of research. Is something I want to get more into because it's pretty interesting. But so some of these more tried and true future spreads include corn and soybeans. This would be intermarket. Crude oil and petroleum. This is an example of commodity product spreads. Soybeans and soybean oil, or the soybean crush, that's another commodity product example. We also have natural gas and electricity. So there's actually a lot more commodity product spreads than I would have assumed, which is pretty interesting. July and December contracts for corn would be intramarket. Treasury notes, so 2-year versus 5-year. This is another one I wouldn't have expected that I think is really interesting. And especially it's an example too of like some things being kind of related to the futures in ways that you might kind of not understand or not really be aware of. And last but not least, gold versus silver as a potential commodity future spread. So that leads us to topic numero dos, breakout trading. So before we actually get into what the breakout trading strategies are, especially with regards to futures, let's talk about actually how breakouts work in general. And there's something we actually probably talk and think about a lot. You know, it's one thing to know a thing on a certain level, and another to look at it cognitively and actually, what does it mean? What does it entail? What are we actually talking about, right? So breakout occurs when an asset's price will move out of an established trading range. And this moment is usually accompanied, or I would say bolstered by an increase in volume. So that example of that SPY range that we were trading in for a while, that ES that we eventually broke out of, was a key one that Sharif was talking about earlier. And the general idea is to go long when a price breaks above resistance and go short when the price breaks below support. So this is an example of, you know, looking for established resistance and support levels, and then when we break out of them with volume, that's when you get in. That's what breakout trading is in a tiny little nutshell. But breakouts are a really core focus for traders, as they typically signal impending volatility and the possibility of significant price trends, especially because we're moving out of an established range and into a whole new world. And so they can occur in any type, a whole new world. Yeah, magic carpet ride of futures trading over here. But I had to. But yeah, so breakouts, yeah, they can occur in any type of market and can be tracked with breakout trading indicators like flags, triangles, and patterns, along with conventional breakouts, or even, as Sharif was saying with regards to the futures, just a knowledge of like price action. That can sometimes really matter with regards to where a breakout is. If you're at a certain level for a certain amount of time, and then we break out, then sometimes you don't even need patterns.
Should we show
right?
that example that we've been talking about?
Your ES example is
let's do
fire.
Let's bring in that chart, because the ES, if you guys will recall, was trending after that November CPI print for quite a while, right? And then we finally had that decided break. Here's the 4-hour look, Adara. Look at that long price consolidation where we knew for a fact that 4650 was the top, and we knew for a fact that 4600 was bottom. We trended within that 50-point range, essentially, from when we took 4600 on November 20th, and then finally breaking through that level, Adara, on December 10th. So that tells you, you know, we held within that range for a while. There was a period every day where I kept saying the same thing on the desk, right? It wasn't this contract, it was a December contract, but, you know, essentially you can see the basic price action is the same.
Yeah, and I think what's interesting too is I know, you know, Sharif was saying as well, like once we have the more touches you have of a range, the more confirmatory that range is. And so then also I would say when you break out of that range, the more powerful it is, especially if you're doing so with volume, right? So I think even if you don't have the patterns, just being aware of these price levels, especially for the futures, where not all traders, you know, as Sharif is, as an example, are going to necessarily rely on patterns. So yeah, just knowing those levels can be super important for breakouts. And when identifying breakout opportunities, it's usually good to look at assets with well-defined support and resistance levels like the futures. So pre-breakout pressure or price action squeeze is another really common identifier of potential breakouts. And so this can occur when higher lows are formed when resistance is being pushed, or lower highs where support levels are concerned. And so it is, you know, it's possible to trade on the principle of just going long above resistance and going short below support. But, you know, some traders like to go a few steps further by analyzing the breakout strategies in greater detail. So one example, one of the primary hurdles, we talked about this a lot today, that traders will kind of run into with this strategy is the presence of false breakouts or fakeouts, if you will, and I will. And so these can occur when assets price appears to be moving out of range, and these are like really common. Like I did this yesterday. I did this with Tesla and then faked myself out earlier today. They are very common. They are not things to beat yourself up over. They're just, you know, the market telling you who's in charge, I guess. And so these can occur, when an asset's price actually is not moving out of range as it seems to be, and it's a really easy trap to fall into. But how do you avoid this? Like, what breakout strategies do work? Well, we're going to talk about some. One of them is the second chance breakout strategy. So this is it's a way to potentially sidestep the problem of a false breakout or a fake out. And in this case, a trader will just wait patiently, like a little mouse here, while the legitimate breakout occurs. They're not gonna get swayed by FOMO. They're gonna be very patient, hands off, as this first legitimate breakout occurs, and they'll enter a position, perhaps, after the price moves and retest the original breakout point. And it should be noted, though, you can miss out on this. Not all breakouts are going to actually occur. Not all retests are, you know, second breakouts, second chance breakouts are going to occur. And a trader doesn't need to wait until the precise breakout point. Sometimes they can, if you know for a near breakout point, you can maybe get back in, right? You don't need to wait for an exact retest. it's close enough, use your judgment, right? That can be kind of an approach there. And if a breakout does test the original price point range, it can give a trader another opportunity to trade in that movement, to, you know, get their beak wet there, right? Dip their toe in the water. And stop losses should, you know, maybe be used with the strategy to minimize any potential downside, especially in something as volatile as a breakout situation. And so this can, the core benefit to the approach is simple. Instead of having to deal with the very stressful process of a fake out, a trader can just be like, no, I'm going to sip my pina colada and ride the wave and wait until we have this retest. Because then you know too, right, that this is a key level. You've seen it break above this time. Maybe it'll be a little bit less stressful, although retests don't always happen.
Right.
So it's definitely a toss up. It's going to be whatever floats your boat. And what was Sharif was saying too, you were saying with regards to the NQ earlier, there, you know, it really is about different types of trading. Because I know you were saying people could have gone that range, done some range trading to the upside on the NQ, or you could have waited for the breakout. So it's really going to be about whatever your personal strategy is, and there's no right or wrong answer really. It's about what's right or wrong for you. Yeah, thank you. I think you can describe that better than I could.
So what we're talking about is the range from this morning, and look how this trend line, which was a support line, now is acting as a resistance line.
Yeah.
Well, they always change, right? Like when we talked about the actual horizontal levels that switch between support and resistance, so do trend lines. And that's one of the things the technical analysis books will show you. They'll always say to you, extend your trend lines as far as you can go, because you never know, that support line could actually end up being flip and be resistance. And this is exactly what Adara is talking about, this range trade that we had in the morning where you couldn't got in anywhere. For example, you know, you didn't have this trend line obviously until after, but you could have got in on VWAP. VWAP was an excellent area to get in on the morning and then try to range trade it to that 17,000 touch, or maybe even a little bit above. But yeah, this is exactly what she meant. You know, we were in an upward channel. You could have range traded this. We definitely didn't have that breakout trade because we didn't clear 17,000 with enough vigor. And so now it looks like we're getting the rejections off 17,000 hot, hence why the Katina man short Uber and short the market, because we are getting that decided 17,000 rejection. We're coming into VWAP again on the NQ. We don't have a lower low, so I feel like we are in a bit of a bamboozling market. We definitely put in that lower high this time around, and here comes the market down, baby. Do we get that break initially of the Katina man printing on his shorts there? 16,965 is the bottom end of this trough, and I'm talking about the candle here at 12:10. He's short Uber at 62.20 is a Katina man short the Uber, to take a page out of the Obi's book, at 62.20. But he's also short Amazon and Tesla at 153.77 and Tesla at 255.30. There you go. And by the way, guys, for those people who are mentioning in the chat, Neil and Sean's positions should be up throughout the day. We have heard you loud and clear. It is on the way. Hopefully in the new year. It should have been ready already. Let's be real about it. But the team who will service this channel is away on December break, so they didn't want to launch this service without having the appropriate team there to service it should anything go wrong. I know I'm being purposely vague here, as I'm required to be, but I promise you it's coming and it's going to be good. You will be able to see Sean's positions. Really, look at that. There's your little preview right there. This will be a parallel channel right there. And on the left side and the right side, I can't, well, maybe I can, oh, no, it's not. Right, yeah.
Love that.
On the left side, you're going to see Neil's positions, I believe. On the right side, you're going to see Sean's. You're going to see the entry time. There it is. Yes. Look at this. Brendel's going to get.
And I love in this example, they're on the same positions. They have the exact same positions in this example.
Yes. When do we get this metaverse channel, says Darwin. I love Darwin. He's always so funny in the chat. Hopefully very soon, guys. We're hopefully by the new year. It's just we're waiting for the software team and everybody who can actually service this to be around when we launch it in case anything goes wrong. You know, we can't just be there and not know how to fix things. So it's coming. You're going to be able to see everything very, very soon. So I won't have to keep yelling out the Katina Man's positions. You're going to be able to have both channels up at the same time. And it's going to be a news feed channel. It's going to be a positions channel. It's going to be fantastic. Always doing the most up in Trader TV Live, baby. Doing the dang most. The podcast is, we're learning from your feedback on the podcast. Things are gonna be, we're gonna change things there, not fundamentally.
We're doing some developments.
Yeah,
Things are in progress. Also, look at that banner.
The DM is like, we are.
Yeah, no, we've been. Some things are in the
in the works. There we go. They're the big kahunas, baby. We have a podcast.
I love they're like a triangle too. Like Brendan's like leading the way, and then
right.
I love all the little banners.
It is, yeah. I'm on it this week with Brendo, so it's going to be him and I on this week, and we'll be talking everything that moved this week. So anything with respect to Affirm and its new deal with Walmart, what have you, it's all going to be on there, Dara, and we don't hold back any punches. We talk real. We talk real for real. Real for real.
We talk for real.
We talk real for real. All right, guys, that's enough of that. Let's talk a little bit of trading here. I mean, what can you say about the future? It's very, very tough to trade today. Look at that move right back down, exactly the same level as the initial trough. So if you're trying to break out or break down trade this, you are getting cut up, especially if you're waiting for levels to clear. They're not clearing at the moment. I don't know what to make of this. I'm going to steer clear. I already took an L on the future, and I don't want to take any more L's until I see a decisive, take less L's, more M's.
I didn't want to say it.
I know you wanted to say it because you giggled. I knew you were thinking.
I was going to wait to let you finish.
I don't want to take any more intermediary, random, mid-level trades. We got to break out or break down below these levels to get me interested on the future. But right now, we're doing our darndest to hold this level. Look how many touches we've had at this random level of 16,965. That's 3 touches so far on the 5-minute today. Initially one here at 1040, then we had a touch here at 1210, and then we just got another touch right now at 110, right at this 16,965 level. What a random level to find some support, but yeah, whatever it is, it's the bottom that's being put in. Now we're getting lower highs though, Adair. Look at that. Crest, lower crest, and lower crest again. So if I had to guess, this could be, a descending wedge. We'll see. We'll see what ends up happening on the day. But yeah, a bit of a bamboozling futures trade today, no question about it. Guys, throw your questions there in the chat. You want to have a look at HMY short is in the green for Arahan?
Yeah, let's
Sorry,
do it.
I mean to butcher your name.
Let's look at HMY, or Homie. Maybe I will call it Harmony Gold Mining Co. Limited is his actual name. Not seeing any news on this. Yeah, I mean, this is actually like a really clean short, I have to say. We did have this kind of double bottom situation around 636, 640-ish. We swooped. I would guess that's probably around where you got in. And I'm only saying that just because that's where kind of the levels are in here, or around this, the 638. But yeah, we are swooping. It looks like a nice clean movement to the downside here. We are still up on the day though, but yeah, I totally we had, this is another kind of example of sometimes patterns don't manifest. This looks like it could have been like a really clean kind of bull flag scenario, and we broke out a little bit, but then we did go falling to the downside. So this is, maybe an example of a fake out, which they don't just happen on futures, they happen on assets too. You have a pattern that looks like it's manifesting, it doesn't manifest, and then you just kind of have to go with what happens. And in this case, yeah, the HMY, the Harmony Gold Mine short definitely seems like it is manifesting. Also, we just got the... It's okay, I was just like, what did I say?
Wrong one, Katina Man. There we go. The Katina Man is printing on Uber.
Congrats.
He reloaded Tesla at VWAP there at 256, I'm assuming. Yes, so Katina Man is still short TSLA, reloading the position at 256. Sorry to interrupt you.
Yeah, it's okay. No, I was just saying this is an example of a fake out because we did have what looked like kind of a bull flag earlier today. We're still up on the day. The flag didn't really come to fruition. The flag pull kind of sunk a little bit there. We went to half mast there. But now this is like honestly though a really solid short. We had that break of the flat bottom. All I have are thumbs up here for Arhan, I believe, in the chat. Also, I'm still keeping an eye, longingly watching that Tesla short from, across the way because I still like the idea of this one swoop into the downside. I did get in this earlier and then panicked and made my exit stage left. But yeah, no, Tesla short still definitely. I mean, we did have like this. We're still kind of in this downward channel here. We're up on the day, but I would say right now the movement on Tesla is decidedly to the downside. But yeah, keeping an eye on Tesla. Google actually kind of catching my interest. I think Obi was in Google earlier today. I believe, I don't want to misquote that. But yeah, Google kind of trying to make a bit of a recovery here from about 12.10 on. If we make a higher high, well, first I'll see if we cross view up. If not, I'd like to see us make a higher high. But yeah, this is not a bad look, I don't think, on Google. Shout out to Obi. What are you looking at?
Oh, I just got into position AAGR, small cap gapper. Made an attempt at $1. Then it came in to this resistance, previously resistance area. I'm looking for it to act as support. If it makes a newer low below 72, that's when I know the trade is wrong, as it makes a new low, and you guys know how I feel about that. So I'm looking for this 80 penny area here on AAGR to hold. You know, we're gonna give this one a shot. It definitely did a little bit of an attempt at that $1 area, getting into 95 pennies. Again, if you're just joining the show and you don't know how I use my screener, I screen everything below 85 pennies. So as soon as something clears 85 pennies, it then shows up on my screener if it's up over a certain, like for gappers, that is. The reason I do that is because I want to see those ones that are approaching the $1 area, and you know, because there's all sorts of different trades you can take at that $1 area, whether it's a break through $1 or rejection off $1 for these small cap gappers. With respect to this particular stock, the flow a little bit larger. 57.866 million shares, so a little bit on the larger side. Market cap is bupkis, $46.2 million market cap. The average volume over 5 years is 1.11 million. It's already done 6.86 million on the day. Looks like it's holding up here at this support level. We'll have to wait and see. But again, my out on this bad boy are going to risk 8 pennies to make about 20 for that $1 test. That's the plan. Break 72 pennies. That's where I'm gone. I'm going to probably have my stop at 71.5 pennies. But right now, doing the dance with no pants at 80 penny area, holding up as a level of support prior resistance area on AAGR small cap gapper. Do we have a reason why this thing is moving? It started moving yesterday. All right. It's called African Agricultural Holdings, and this one had headline yesterday. Welcomes Mr. Osman Ahmed, Managing Director and Head of Private Equity at 10 Times Capital, to its Board of Directors. Really? We're going to move up on that? Okay, so this Osman
he's like
Ahmed,
a really exciting dude.
this dude better be something, or I'll tell you that. No,
they're super excited about him.
Right? Yeah, I know. So we'll see what we get at this 80 penny area. We'll see. We'll see. Nothing really to get excited or write home about. Let's see what the chat is up to here. Let's see if there's anything being talked about. Frank Jones saying indices and futures with pretty much the same patterns on the 1 minute, trying for a trend towards that 50 on the 1 minute, higher highs on lower volume spells failure here. Very good observation, Frank Jones. You see higher highs on lower volume. That's typically a recipe for a reversal. You should be seeing typically, you know, you want to see increased volume. It's not a hard and fast rule, but it is something definitely to keep your eye on if you are looking for volume as a confirmatory indicator, or you're looking for a possible reversal, look for declining volume in that particular case. We'll have to wait and see how that happens. Already nicely in the money here, a couple of pennies on this AAGR. Nothing to write home about. Looking for a possible $1 test. That'll be a lot better than where we are right now. With respect to the futures trade, I'm going to completely stay out of this futures trade until we decidedly break above 17,000, and then we can talk about that again. But right now, I'm seeing lower highs and kind of a dance here at VWAP in this intermediate range. Nothing for me to get excited about on this particular for this particular trade on the future, on the NQ I'm talking about. So staying put, staying clear of that. Hamptons Trader, 17K maybe again today, or you think we are done with the level today? I don't make a prediction one way or another. Let's let the price tell us where it wants to go. Participate, don't anticipate that means leaving a little piece of profit on the table. That is fine with me as long as I get the confirmation in exchange for leaving a little bit of money on the table. That's fine with me. We're gonna have to wait, see what it does. But we've had umpteen attempts to break 17,000 today, all of which, you know, they didn't reject in the strict sense. Sure, they got above 17,000, but there was no continuity there, and that's what I'm talking about when I speak about taking the level. It's not about just breaking it, you know, a perfunctory wick here and there, or, you know, a move up here and there. No, we're looking for that decided break and hold above 17,000, and then maybe to get it back on a dip back in at support. We'll have to wait and see how that works out. Adara, nothing to really talk about at the moment.
Yeah.
PFE making moves higher with some volume. You want to look at Pfizer, our friend Pfizer?
Let's look at Pfizer. Ooh, okay, hello Pfizer. This is quite an example of something clinging to a certain level and then bouncing off with a vengeance. Like Pfizer, we had like this upward channels more or less kind of here, and then we took a little bit of a pullback starting around 1050, around when we came on for the midday RIP. Now we're how to trade. We slunk back down to VWAP, which is also where we had some consolidation earlier. So that's around this 27.7 area. Clearly a key level for Pfizer on the day, because look at this. Now we touch, then we go a little bit lower and then touch that level again, this 27.70 thereabouts. And then we bounce up, we hit another level of consolidation, this 27.75 that we were jumping around earlier. Then we push even further and then we're like, yeah, sayonara. Also, I would argue we have sort of a bull flag on Pfizer from about this 27.75 to about this 27.95. That gives you a 20-cent breakout. So now we're kind of breaking out around this 27.95. So if I were to be in this and measure this, I probably set a profit taker at 28.15. Why? Because that is the length of the flagpole. That is what the technical analysis books tell me is my profit taker, and then I might leave a piece for the dream. Pfizer, a great look though, no matter how you analyze it. Although I would say, yeah, this is an example of one of the big things I've kind of learned since, you know, being on the midday and how to trade is the importance of how, like, we always need to know what VWAP is doing, but it's not always going to matter to every trade or every stock. Pfizer and VWAP, super key earlier today. Once we bounced off that point, it was not looking back. It was like putting sunglasses on, leaving it in the rearview mirror. Pfizer, a really good look. Roger in the chat, yeah, Pfizer easy chart. Yeah, that's fair.
Yeah, and it's been selling off aggressively, so it's nice to see that it's having finally a good day today. 3 2/3 of the good. That's something to sneeze at.
Yeah, it's taking its vitamins.
And it's that high a day right now, just breaking through. What is that? 28? It just broke through 28 bucks.
Yeah.
Right? Which was a key resistance level earlier, correct? We had a couple of wicks in the 28, all of which were rejected even earlier on that crest. Yeah,
that's
right
true
there
too.
into 28-ish area.
The range of 28. Yeah.
Yep.
That's
good
crazy.
look here on PFE. Okay, we'll take that. I was just telling my old man the other day, I'm like, man, Pfizer has absolutely been rinsed this year, because he, you know, that's one of the few stocks, you know, that I think he follows. And so I was telling him, I'm like, you know what? They've had 2 weight loss drug testing phases canceled this year for excessive side effects. The first one was on a different formulation back in June. The most recent one, the one from a couple of weeks ago, was on a new formulation, just too high of a dose. So what they're doing is they're going to do a third study with that second formulation, the more recent one, but at a lower dose. In fact, they're going to use half the dose that they were apparently using in the first study. Apparently it's going to be much better tolerated. So if that's the case, you know, finally they're going to have their foray into that weight loss drug market that they haven't been able to get into. Obviously they've lost all the first mover, even second mover advantage. Novo Nordisk is in there. Obviously we know that who else is in there? Novo Nordisk,
Lilly.
Eli Lilly, thank you, with their Wegovy. So Novo Nordisk with Ozempic, Eli Lilly with Wegovy. Is it Wegovy? One of them.
Wegovy and Ozempic are both Novo Nordisk.
Oh, they're
Eli
both
Lilly is
Mounjaro.
And then also they have another one as well.
They do, eh? Okay.
Zepbound.
Oh, okay.
Yeah, I know the stock.
Yeah, clearly. Yeah, so we'll have to see if this third mover advantage has anything left in it for them. But it's been a tough year for Pfizer. Case in point is, if you believe in their product pipeline and the amount of talent they have there, the scientific talent that they have at that particular company, it might be an interesting time to buy. Not financial advice, goes without saying. do your own homework on that one. But yeah, Pfizer's had an absolutely terrible year. Let's see what it's down year to date here on PFE.
Definitely not pretty.
No, I don't think it is. Let's find out quickly here. PFE year to date, Adara, down 43.5% year to date. The Katina Man's excited about that. I bet you he wants to load up. I don't want to put words in your mouth, but are you interested in this stock possibly? You just bought some last week, so I'm not out of line saying that. Yeah, man. Look, man. All I can say is that this company has had a product pipeline for like 30 years now. They don't seem to disappoint. So unless the trend is going to change on this bad boy, we'll see what Pfizer does the rest, or in 2024. I was going to say the rest of the year, but there's not much left. We'll see what they do in 2024. Terra Engineering, all of those drugs are almost impossible to get. Really, I didn't know there was a shortage of these weight loss drugs. All I see is on my Instagram and Facebook is like all these advertisings for these, like, basically it's just like a nursing company that has a registered practical nurse do some sort of blood test on you, and then they can write you a prescription for these weight loss drugs. And that's all I see is these companies that hire all these RPNs to do these, to sell you basically weight loss drugs. So you don't have to go and see your doctor and get a prescription the traditional way. So I didn't know that there was a shortage. I had no idea.
Interesting times.
There's so much demand for these drugs that the people that actually need them for either diabetes or weight loss can't get their hands on it. The Chilean Nightmare just told me in my ear right now. So apparently, so your point is very well taken there. Who was it? Frank Jones. Who was it that just said that to me? Yeah, I don't remember. Somebody just told me.
Terra Engineering.
Terra Engineering. That's it. Sorry about that. Interesting. Zoltan Marina, calm down, bro. There's generics for that one. Now I see you there in the chat trying to get slick with it. Glenn Smith saying it's just like all the EV advertisements. No one can deliver them. Yeah. A really good point. Yeah. All I see is Fisker and Polestar on my Instagram feed. Go into the dealership and you're probably gonna have to wait 6 months. But yeah, that's neither here nor there. What else we got on the radar here, Adara? Not much moving right now. I mean, anything that you guys want us to look at, put it in the chat. Tag Adara and I. We'd be more than willing to look at it for you. Rich people diet pills, says Destination USVI. Well, yeah, okay. However you feel about that, I see your point. James Dell says drugs should not be allowed to advertise like that. Well, in Canada, you can't actually advertise the name of the drug and what it does in the same advertisement. You have to choose one or the other. So you can say, here's something for weight, go speak to your doctor, and you don't actually say the name of the drug. Or you can have a commercial with the name of the drug, but don't say what it's for, and say go online and read about it. So in Canada, we've kind of had that middle ground. In the United States, it's a free market system. There's plenty of drug advertisements. Just watch cable news, and you know exactly what I'm talking about. They live off those pharmaceutical ads. But yeah, that's what that is. Mara, you want to have a look? Is Mara doing anything right now? People are talking about Mara.
Yeah, we were looking at Mara earlier. I can look at Mara again. Yeah, Mara, I mean, we still had our Christmas tree retracement. As the Sharif was saying, 'tis the season. I really enjoyed that.
Yeah, we're trying.
We made a higher high and a higher low. Mm-hmm. So we're slowly trying to pedal back to the upside here, make a marathon move up.
There you go.
I mean, we're still up on the day. It's like 7.5 up on the day. But yeah, if we continue to make higher highs and higher lows. I said it right this time, so proud of myself.
No, so tough.
I could be intrigued. Volume on this is great. We're at almost 60 mil. Definitely a name to look at. Let's look at coin as well. I saw some people mentioning coin in the chat, and I am a man of the people. No, I'm joking. So why not? Yeah, coin very similar to Mara. Lower high, although this one is kind of more interesting. We had like a more gradual breakdown, I think, than that Christmas tree retracement we saw in Mara.
Yeah.
Lower high, or sorry, high, lower high, lower high. Then we flew to the downside.
Yeah, it's lower
and this
highs
one
and
is,
lower
yeah,
lows
it's taken a
throughout.
bit more.
Yeah.
This one also is a bit more of a solid bottom, I would say, around this 155.68 area. We'll have to see if we make a higher high, if we break above this 157.50. Yeah, interesting look, and we're also less up on the day than Mara. We're up about 2%. But yeah, this one I think is a bit more of an interesting chart to me than Mara, just because of the, it's kind of made a bit more radical movement. Yeah, very interesting times here.
John Del Segno, great call, John. Good eye there. Talking about Piton. Piton moving back into highs. Here we go on
Cycling
Peloton.
upwards.
Not like you didn't actually just drop. That's just too much, Adara. It's really good though. I got
I need to
tell you the truth. It's really good.
I have like an addiction to puns.
It's like cycling upwards. Yeah, that's fantastic. 631 high, Adara. We're right at that level again at 629, 630 right now. A bit of a V-shaped retracement. This nice double bottom off that 6, what is that, 12, 11, Ooh. Something like that. Yeah, you're not getting much in the way of notional range, but you are, you know, getting that move up. I have a trend line here that's drawn. Did I just draw? Yeah, well, this is still lower highs. You know, based on what we did on the 14th, we broke through those highs. With respect to resistance through this level, 6.5 looks to me like it'd probably be an interesting resistance level. We're at 6 1/3 right now, so I'd say 6.5. Nothing for me to do here on Piton, but it is interesting. What is it up on the day? PTON?
I have 4.5.
Thank you for having me, because the chart malfunctions for some reason at times. So yeah, good luck there, John. Nothing for me to do though. On this bad boy. CGen says surf. Sure. Let me just wet my beak here on one of these outs on our friend AAGR. I'm going to put up a beak wetter at 85. We're at 84s right now. Heavy size on this one. Let's see if we get filled. Holding this key support level. We had an attempt at $1. We rejected it. We got into that 94.5 penny area. Came back in to the original crest, which we know is resistance. We hold resistance for previous resistance, now support. Let's see if we can get that move back up. That's the whole reason I'm in this trade. But let's have a look at CGen. CGen was one of those ones. It was a small cap gapper running aggressively the past couple of days. Couple of days? Was it a couple of? Yeah, 2 days in a row now. We are still within yesterday's price action. So look at yesterday's price. We started our life yesterday around 78 pennies, got to 246, so a smidge below. Sorry, we got to 250 on the day, so we're still definitely within yesterday's price range. 246 the high today. Kind of consolidative. I gotta tell you the truth. Let's put in some indicators here. I don't know why we have intraday VWAP off. Intraday volume weighted average price, add, and we're going to change this thing to white, apply, okay. There we go. So but we're below VWAP. You know how I feel about these small cap gappers taking them south of VWAP. Personally, also, I wouldn't have taken this one long just because look where the pre-market high is. So this right here is 7:20 a.m., this peak right here, right? The peak was 249 a day. Did we break that at 940 when we touched it? No, we didn't. The best we could do was that 246. So I wouldn't have taken this north. I need the break of the pre-market high to take these small cap gappers long. If we don't get it, I don't take it. That doesn't mean it's not tradable. It's just based on my particular style, I'm looking for the break of the pre-market high, and we didn't get that here. So I would steer clear of this one. But hey, it's below VWAP and we didn't break the pre-market high. That's a double whammy for me not to get long, so I'm staying clear. AAGR says, Jordan, yes, my man. Don't you see that I'm involved in this trade? And I just got a beak wetter. We're going to spin the money on this bad boy. All right, we got 6 whole pennies, Adara, on this bad boy. But really, we want that $1 break. Yeah. So that's what we're holding.
Well, it's poised to make a higher high.
That'd be nice.
It's above VWAP. It's filled all your small cap parameters.
It has.
That you so helpfully laid out for us last week, right?
Thank you.
We have the above VWAP. And we have we broke the pre-market high. So yeah, no, AAGR, not a bad look. I don't think.
This one did kind of like nothing in the pre-market, so the bar was set really low.
That's true too.
Right?
Yeah.
So I mean, we only needed to break 50 pennies, and this one wasn't on my radar until a little while ago. But here we go again. Let's get that beak wetter, baby. One more at these levels. Let's take that. All right. So we're still holding a little bit of a nicer move up into 90 pennies. 10 whole pennies in the money. But guys, when we're joking, but you know, in reality, this is, you're gonna get these kind of moves on an 80 penny name. 10 pennies is not bad, but you have to size in accordingly. And how come my outs are looking as yellow? I need to change that. So custom
Maybe it's
agent
because they're
dialogue.
the yellow beak getting wet.
You're killing me, bro. All right, there.
I don't
All
know.
right, so we gotta flip this to red and then flip that to purple. There we go. We're gonna go apply, okay. And nothing changed, so we'll have to do that after.
It like wants to be yellow for some reason. It's like,
does. I don't know
Sharif, you
why.
think you have control?
You don't.
Yeah,
I'm in
like
charge.
the market doesn't care about your feelings, and neither does
Yeah.
this chart, apparently.
There you go.
Very strange time.
Yeah, I'll have to send it to you. I just want to change this up.
Yeah, absolutely. I mean, some people mentioning Netflix in the chat. I like trading Netflix. Netflix is a good look. We did break, pulling back a little bit here, just a skosh, but we did break high of day on Netflix, 494. We had this really interesting kind of look on this one. So we kind of making higher lows throughout the day, higher high. Then we kind of had this nice little moment of consolidation just above this 492. Then we broke lower, made a nice little bottom here, 490 and a bit, then slightly lower high, and then a slightly higher low. So we were compressing. And then Netflix said, you know what, we're gonna break to the upside, and we flew. Let me look. I had my eye on this one. This one was on my side chart. It's been on my side chart all day. In fact, I will pull it up to prove. Here it is. But yeah, I like a clean point of entry, and I like range trades for stuff like Netflix. Let me look at the daily chart to see how this one is shaking. Yeah, I mean, great look on the daily as well. We haven't been like, we'll have to see if we close above this level, right? But we did have like wicks kind of around this level. July 19th, 2023, so it's been a while for Netflix. Not a bad look at all, I do have to say. This is going on my watch list, pun intended. But yeah, no, it's a good look. It's a good look. Also, Elon in the chat. Hi, Adara. Hello, Elon in the chat. TWLO, sky is the limit, and the emoji with the money looking, the money face. So let's pull up TWLO, Twilio. Is there any news on Twilio? I like to know if there are catalysts for me to be aware of. Not seeing anything on this one. I have the daily chart, although great look on the day for Twilio on the daily chart, but I like looking at the intraday movement as well. Yeah, 5-minute chart in Twilio. Volume is not enough for me personally, because I like to usually have about 1 million. Because I just find like, A, you want that liquidity, and B, when I've tried making trades, when we're even like right now, 850,000. Why could I not do numbers for a second there? 850,000 is still not necessarily like, enough for me to be super interested here. But yeah, definitely very clear upward channel. Not a bad look at all. I will agree that Twilio, sky could be the limit on this one. Very strong look. Thank you to Tammy KB in the chat. Adara, you are so real, and I love it. Thank you so much. Everybody's here is real in the chat. Appreciate all of the participation. Also, Machka M in the chat. I'm so sorry if I said that wrong. I probably did. How's Meta looking? Meta has been honestly in a really interesting looking range throughout the day. We had this is another example of sometimes fake out patterns that do not materialize how you think they might. We had a flag pull here that could have materialized into a flag and really did not. We sunk like a stone, and we held this 350 beautifully, as Sharif was mentioning earlier. We sort of broke above it, then we recovered. 350 still the level on Meta. This is not something I'd be super interested in unless, A, we have a bit more of a decisive range, because I like those ranges, or we have a break above this earlier kind of high of 351, or a lower low decisive break of 350. Not a bad look, though, on Meta, but it just needs to decide what it wants to be when it grows up. Right now, it's kind of scrolling through the Instagram feed, and it needs to, decisively click like and make up its mind.
That was good.
I hate to stop myself.
You're funny.
Self-control is the goal here.
That's all good. Look, guys, we're at 17,000 again. How many times are we going to do this? Oh, my goodness. So 17,000, as we expected, was likely going to be a key resistance level that we would probably have to dance with multiple times before we cleared it. I gave the example earlier of that 4,700 level on the ES contract, where we held 4,600 for a long time, and then 4,650, and then 4,700. So it's been that kind of feel on the market where we consolidate below key resistance for a while before getting that outlying event like a CPI or or an FOMC meeting to kind of really propel us ahead of that level. I'm not saying that that's going to be required this time around at 17,000, but there's no question on the day we're doing that dance with 17K, not able to clear it with any vigor. Again, you know, looks like in this case we're getting a rejection off it at the moment. So we'll have to wait and see what we get. I already lost heavily today on a futures trade, so I don't want to take another one and get slapped in the face. If this one clears 17,000 by a fair margin, then we can really look at that trade again. But for now, I'm just going to keep observing it and seeing what it does. I'm not going to be interested in shorting off 17,000 either, right? In case it gets me the wrong way, and then we really start trending up. So, going to continue to watch 17K on the future, and then we'll decide what we're going to do with that trade once it gets into the appropriate level. Now, with respect to this AAGR trade, it is coming down into my level here. For break 76 pennies, I'm going to get out of this. So I don't want to see the closing of a lower low below 80. If that's the case, then the trade is no longer valid. We're looking for a pattern, or sorry, not for a pattern, but for a trend to develop here. We've taken 3 outs. We have 2 left, and it looks like I'm going to get stopped out here as we move into 76 pennies on AAGR. Just, what is that? Yeah, so about, there it is. There's the last little bit. So we take a little loss on that remaining portion, but profitable trade, very micro compared to the futures trade though, sadly. So really haven't made that up. Still red on the day, no doubt about that. Elon, Sharif, Adara, salute to you two who bring us the Santa rally with all these trading knowledges and lessons. Cheers. Thank you, Elon, for participating every day. You're obviously very active in the chat, asking pointed questions, and I'm sure if you have those questions, others have them as well. So thank you for asking them, and thank you for putting us to the fire, you know, making sure we know our stuff, and sometimes we don't, quite frankly. So we got to look into it and get back to you on that. Sharif, do you mind to share your bad trade? Yeah, I did share it. It's right here. Let me share it again. Makes me feel really good when I talk about my bad trade. No, in all seriousness, I was looking for 17,000 to clear. So what I was saying was you got to get away from that level decidedly, especially if you didn't make a newer high, which in this case on this crest we didn't. We already had a higher high, which was 17,012. So when we made our way back up there, I'm like, okay, we have higher low, higher low, higher low, another higher low. This time looks good. So we got in, I got in at this 1708, quadrunked all the way back down, looked at VWAP. It did end up holding a general VWAP area, but just too far away from me, so I ended up taking the L. So yeah, it's an L nonetheless. That's basically the whole point of this one is I didn't wait long enough for it to clear the 17,000 point level to show me that it was going to hold that level. It was, you know, still doing that wick dance that I call, above the level, below the level, and you know, pulled the trigger too early. So ended up taking a punch in the face on that future trade on the MNQ. That's the one that I was talking about essentially. What do you think about plug long term? Really good question. Yeah, like look, do I think that, you know, EVs or just battery? What's up? He's coming in hot with something there.
Truffle caramel.
Oh,
thank you.
Thank you very much, Katina, man. All right. We're going to take this for after the show when I take off my Invisalign.
Thank you, Sean, for the delivery.
Appreciate you, Katina, man, there. Coming in hot with, he comes bearing gifts.
Yeah, sometimes it comes bearing salad imagery.
Right. We don't have any of that, but that's fine.
But I know he showed the salad earlier, so that was something on. Yeah. You know what I mean? Today we got truffles. Beautiful time.
Yeah.
I love all the little the cameos.
Yeah, of course. We're breaking above 17,000 now, or 17,003, so I'm keeping my eye on the future. But to answer your question about plug, do I think batteries are really the only method of portable energy going forward? That's really the question here. What alternative are we going to have to these lithium ion or whatever technology of batteries we're going to use? A lot of people are championing another horse, and that is hydrogen, right? Using the fuel cell technology. It's very old technology, hard to make into a practical vehicle. Like anybody who lives in California knows about the Toyota Mirai. The Toyota Mirai is a sedan sold only in California that uses only hydrogen for its propulsion system. But anybody who sat in one of those knows how unpractical, impractical of a car it is. Because of all the different storage containers for the hydrogen, everything is so elevated off the ground. You feel like super condensed. Your headroom is like there's almost none. You got to be 5'4" to fit into that thing comfortably. So there are practical issues with this technology. In addition to that, we've seen that they're quite volatile, like with Nikola having umpteen amount of fires with their trucks, with their hydrolyzer system that they attach onto their trucks. There's two different ways to do this from my understanding. One is to convert hydrogen into electricity, and one is to actually use hydrogen directly as a form of propulsion. So that's my understanding. I don't know how I feel about plug power. I don't know how I feel about fuel cell or Nikola or any of these other companies that are using hydrogen as a form of energy. I guess we're really going to have to wait for it to actually prove itself and show that it can be commercially viable. If it isn't, it just remains as a science experiment, and it's good to have from that perspective. But can you scale it? Really, that's what it really comes down to. So I'm going to reserve judgment until you can prove it in fact. And I don't have to be first. I always say this: participate, don't anticipate. Once it's proven, I mean, you leave some money on the table, you're not first mover, that's fine, but it's also a little bit safer of a trade. Personally, that's how I just feel about that. But yeah, I'm sure people have their own opinions there in the chat. Californians have never seen a cobalt mine, says KB. I like how he has a KB Homes
oh, I like
thing.
that.
Yeah, because KB Homes obviously is a homemaker.
That's commitment.
Yeah, interesting.
That's
I like
commitment.
that, KB. Shout out to you.
I like that.
Uranium-powered cars are coming, says Kurt Hoffman. I haven't heard of them, but fantastic. Thank you for letting me know about that. Ponzi Fonzie saying hydrogen is very expensive to produce 10 years out, in my humble opinion, says Ponzi. Jakob says, as far as I know, hydrogen can't be contained for long because it's the smallest molecule. Not like I would understand anything about that, but interesting comment there. Why not, says EV got long way to go. Yeah, I'm assuming these battery cells are just going to get better and better. You got the likes of, what's that, QuantumScape working on a different battery that doesn't degrade. You can charge it quickly without it, messing up. Matthias Lane says flux capacitors are the future. Saw it in a movie. Must be true. Shout out to you, Matthias. We do have the EV King here at the desk with the Katina man. Woo! He is there. So if we could possibly put some questions to Handy Rain. No, he said no. He's chilling. He doesn't want to take any questions. So please hold off your questions. Short smeller.
Don't bug us.
Don't bug him, says the Katina man. Us, don't bug us. What else we got there? Zero emissions by 2035, not realistic. I would have to agree with that, four lads. Glenn Smith says hydrogen useful after abundance occurs for edge cases like polar regions. Interesting. Okay. Not a case that I've heard made, but thank you for letting me know about that. Main of Gold, was just on CNBC about the lack of chargers to catch up and to meet the need of 100K a day to catch up. Not going to happen long term, sure. Okay, interesting. Broadest Wolf says Santa Rally for the rest of the week. I am good with that, my friend. You bring on the Santa Rally, and you and me will be good.
You're going to get on the sleigh to the Santa Rally there?
Of course, Adara.
Yeah,
of course.
Why not? I have a problem. We've discussed it.
That's all good.
It's cool. But yeah, so no, I think yeah, the market definitely in a rallying type of mood. I will discuss this. Was happened a little while ago, but I will discuss this. Mildly unfortunate short on Tesla. I mean, this is why risk parameters exist. Like I said, the scalpulations are based on levels I like, and then being willing to kind of play with these levels, right? So I wanted to get out on this. If we had 255, I got in around 255.60. We broke 256, and then I saw that we were holding 256. Got out. Happy I got out where I did because we were continuing to see some strength there, pulling back a little bit on Tesla, but right now, I'm not going to short Tesla. We're going to let Tesla decide what it wants to do. Because I am, yeah, it's not.
It wasn't Tesla today.
It was not best. Thank you for saying that. It was Besla earlier. My first little baby scalp long on this was Besla.
Right.
And then after, it's just that the calls were not the right calls. This call was actually a good short had I not accidentally dollar cost averaged what I did not mean to. That was a fat finger moment. And B, then gotten out way too early. But either way, I love the fat finger definition there.
Yeah. Oh, that's fantastic. Shout out to the Chilean Nightmare, man. He's on this stuff, eh?
Right. And there's pronunciation key. There's a whole glossary. I love it. But yeah, basically.
Is that what that's called? A pronunciation key?
Yeah. Where it has like the letters and stuff.
That's what it's called? Okay. I didn't actually know that.
Yeah.
Oh, cool.
They have them on like Wikipedia as well. So if there's like, celebrities with like funky pronounced names like Saoirse Ronan or anybody like that, and you want to know like how do you say that name?
I thought you said certiorari for a second.
No.
There, which is like a legal writ. You got me excited. I'm like, how does she know about certiorari?
Well, my best friend is so she was in paralegal school. Now she's like a court clerk. So I know some legal terms through that, and then also criminology. But yeah, no, that one I'm not aware of.
Yeah. It sounded awfully close to certiorari.
Yeah, no, it's the name of like an Irish actress. But yeah, the point, pronunciation keys are cool.
Yeah.
And so basically what happened was I fat fingered into this, and then mistakes were made, and all we can do is learn. You know what I mean? And that's why also I'm really grateful to be in the sim. Additionally, too, thank you, Mui, in the chat. Really appreciate that. But yeah, basically, really happy I'm in the sim, really happy to be learning and just taking small share sizes, trying to take advantage of movements that I think are present. Thank you.
I want to point out Google here, guys.
Oh my gosh, Google.
Yeah, Google is definitely the outlier in terms of strength in the Mag 7. Everything really weak right now. Let's just look quickly at the charts. You have Meta hugging VWAP. You have Amazon below VWAP. Likewise with Apple. Sure, Microsoft is at VWAP, but it's doing nothing. It's right on the day. Tesla is doing a bit of a zigzag. You heard Adair just talking about that. With respect to NVIDIA, we're very much still in that compression pattern with the lower highs and the higher lows. That hasn't changed. We're still really in a tight range. But the one that's really been the outlier is been Google. Look at this. We're up 0.85% on the day. We were south of VWAP. We found some support at that 136 level. It was multiple touches, about a triple touch there in the low 136s, 136.08, technically the low on the day. It was VWAP rejection central until this 120 time slot came in. And I actually looked at this when it was south of VWAP, and I said, it'd be interesting to take a short off VWAP here. Glad I didn't, because this one continued through VWAP. We're not at high days. That's 137.47, so just a smidge below that 137.5, but we are knocking on the door of 137 at the moment at that 136 mid 90. So good strength. We put in a higher high here. There's no question about that. We broke through this high as well, but we likely may encounter that resistance at the whole dollar level. If we don't, I think we probably make it back into that half dollar, maybe for a high of day test. But Google definitely the outlier in terms of strength on the Mag 7 right now. With 5 minutes left on the show, then we're going to send you over to to Sean and the Obi-Wan Kenobi, as well as Brendo, and I'll join Brendo at the big desk.
Yeah, exciting times. Yeah, if anyone else has any questions, please put them in the chat. I sound like Obi now saying words in French, but why not? Yeah, if anyone has any questions, put them in the chat. Really exciting to chat about some futures today, and honestly, my big takeaway from Futures Week so far has been like how similar it kind of is in approach to trading assets. It's just looking at something longer term, and also you have so many other opportunities with commodities. So I think that's been really interesting. Thank you, Elon, in the chat. As always, great show, appreciated. Also, MJP asking about thoughts on Amazon. I mean, I'm sure we might hear about Amazon later with Obi coming in, because he always has the great input on, as he calls it, the Amazon. Yeah, Amazon, like a lot of these Mag 7 names, trying to figure out what it wants to be when it grows up. We had like a lot of chop and churn in this like little baby range here. Bottom of the range was about 153.20, top of the range 153.80. So not a lot going right there, but kind of an interesting. Sorry, not 153.50 to 153.80. So it's like a 30-cent range. Breaking out of that slightly. We are down on the day. Honestly, Amazon not doing too much right now. It'd be interesting to see if we break below this 153.06 and see if we make a lower low. Not a name I trade a lot, so I apologize. I don't have like a lot of perspective on this other than definitely starting to break a little bit to the downside of this range. I am sure Obi will have some insights on this because he knows this stock like the back of his hand.
Yeah.
And he will probably have some better levels than I do. But my general level is I'd like to see what we do if we break below 153.
Absolutely. And look how long, Adara, we did
that range.
Yeah, look at that. How long we ranged below 150, not really having any strength of breaking through. But look at this, consistently higher lows. And while the ranges were really wide, initially look how the ranges started to narrow when we started approaching that 150 area. So this was an interesting level here through the break of
Double
150.
top, yeah.
We're still not close to all-time highs. Like, I mean, the all-time highs before the split, obviously. We did a 20-to-1 split back in November of 2022, but this chart is split adjusted, and we've got to get really up to that 190, 188 level for all-time highs. But Amazon having a great year. You need only look at the chart from January onwards, guys. In December of last year, we were below $100. We were at that $80 level. I'll never forget that. December, we were talking about Amazon in the 80s, and there you go. Been up and to the dang right, making higher highs and higher lows.
Up and
on
to
in.
the right.
So, yes, ma'am. 2 minutes left on the show before we send you guys back. Nick Dubb, could you look at Disney on a daily or weekly time frame? I swing mostly and feel like it sets up very well, similar to Rivian. Sure, why not? Let's have a look at DIS on the daily. We'll start off with the weekly here. Let's look at the weekly on Disney. So I have some overlaying stuff here I have to take off. So let's go ahead and take the secondary thing off over here. And we're going to go apply OK. There we go. Now I just need to put in my V. Oh, no, I'll forget about that. So the weekly, we just put in a lower low not that long ago in October, fair. We still have a series of lower highs. That's the thing with Disney. Like, we haven't broken out of this funky range. Look at this.
Range.
Yeah.
I like that.
August 2022, Adara, we got into that 125. That was the highest in recent here. And then February of this year, we got into that 122, and we haven't even come close to it around there. So I'm going to need a higher high. But it looks like you're swinging maybe for a shorter time period than that. So with respect to that, where do we have the levels incoming? Obviously, I'm staring at that $100 right in the face there. Nick Dubb, I got to tell you the truth. A lot of consolidation there between March and April of this year at that $100 area. But this trend of making lower lows really concerns me. The nice thing is, though, we got above these two peaks over here. We made a newer high, but we're still in that resistance zone from that 97.50 area, 95-ish area. Seems to be a bit of a resistance zone on the daily. We'll have to see how that works out. But we are all out of time for today on the show, so go for it, Adara.
We are. We will see you tomorrow. For now, we will pass you over to Sean and the Amazon King, Obi, and Brendan. But we will see you tomorrow, same bat time, same bat channel. For now, Brendan is at the big desk.
Hey guys, yeah, welcome back in on a pretty interesting afternoon shaping up here. We're going to get into a little bit more on the economic side of things once again with Frank Caberna.